Hello， 大家好，欢迎关注华尔街电视频道。这期的热点深度关注孙志刚。在中国的时政话题中叫孙志刚的不止一位。20年前有一位大学生孙志刚，当时他因为没办暂住证，在深圳被关进了收容所，活活被打死。由此引发的孙志刚事件，最后是促成了中国收容遣送制度的废除。而今天要说的是另一个孙志刚。据中共中央纪委国家监委网站在8月28日的报道，贵州省委原书记孙志刚因涉嫌严重违纪违法，目前正在接受中央纪委国家监委纪律审查和监察调查。目前中纪委暂时还没通报这位当官的孙志刚涉及何地、涉及哪类违纪违法案件。但要知道孙志刚在2020年11月已经是卸任贵州省委书记。同年的12月转任第13届全国人大财经委副主任属于是半退休的状态。在2023年的3月就已经彻底是卸任退休了。退休了仍被查，可能是涉及的案情不轻。孙志刚也是继上海市人大常委会主任董云虎之后，20大后第2位被查的正部级高官。孙志刚也是第1位官方公布被查的卸任省级党委书记。那据公开资料显示，孙志刚于1954年的5月出生，河南荥阳县人。1971年2月参加工作，1976年9月入党，研究生学历是经济学博士。孙志刚是河南人，却在湖北省待得最久，在武汉他生活了20余年。1973年9月，曾经在老家河南当过下乡知青、基层水库主任、教师的孙志刚，进入了武汉钢铁学院学习。在3年之后留校任教，当了4年教师。孙志刚在1980年进入上海财经学院攻读硕士研究生，毕业后重返武汉，但进入的是中南财大，在经济研究所做研究工作。在1985年的4月，孙志刚从政，而曾任汉阳区区长、武汉市副市长、宜昌市长、市委书记等职位。在2002年8月起，孙志刚任湖北省委秘书长、省直机关工委书记。2002年8月起兼任湖北省委秘书长、省直机关工委书记。在2006年的9月，孙志刚转任中共安徽省委常委，并任安徽省政府常务副省长、安徽省医改领导小组的组长。在2010年12月，孙志刚进京调至国家发展改革委，担任国家发改委的副主任，兼任国务院的医改办公室的主任。那在2015年10月，孙志刚调任中共贵州省委副书记、副省长、代理省长，一直做到省长。在2017年的7月15日，孙志刚接替陈敏尔任中共贵州省委书记。同年的10月被选为中共第19届中央委员。2020年11月卸任贵州省委书记。同年12月转任第13届全国人大财经委副主任。2023年的3月卸任退休。在孙志刚的仕途中，值得关注的是2010年至2015年，孙志刚曾经是主管国家医疗改革长达5年的时间。孙志刚在这段时间经历并推动了2009年启动的中国新一轮医疗卫生制度的改革。这一轮的医改意在是改变公众看病难、看病贵的情况。孙志刚提出2020年要实现人人享有基本医疗卫生服务的目标。孙志刚作为医改办主任，还拿出了曾经作为安徽省医改领导小组组长时推动实施的以省为单位的基本药物采购模式，这个曾经被称为是安徽经验。但安徽经验又被医改办主任孙志刚推行到全国，但受到争议的基本药物制度改革推行力度有限，新医改效果没有达到预期。孙志刚此番退休后被查，或许和当前的中国进行的医疗反腐运动有关。在7月底针对医疗系统，中共当局是掀起了一场声势浩大的反腐运动。国家卫健委联合公安部、审计署、药监局等10个部门，开展了全国范围内医药行业腐败问题的全领域、全链条、全覆盖的集中整治，为期1年，截止到2023年的8月17日。在今年以来，全中国至少已有184位医院的院长、书记等被查，比2022年全年的88人是翻了1倍。有多家医药企业的董事长也被带走。那梳理孙志刚的履历在医改办主任的位置上获得正部级头衔之后， 孙志刚的下一站是贵州省，带着正部级重返地方政坛。当时孙志刚料将是接替已任贵州省委书记的陈敏尔，担任贵州省委副书记、省长职务。而一位中国时政观察人士向华尔街电视频道透露，在中国要当上省委书记级别，那没有2个常委的背书那是不行的。此番孙志刚被查，或许之后会带出2个常委级别的人物，其中一个常委级别的人物就是俞正声。北京青年报旗下的微信公众号叫政知圈消息就曾经提到，孙志刚在宜昌市任职期间曾与曾任中共政治局常委的俞正声共事。在2002年，当时孙志刚是擢升为湖北省委常委秘书长，并在这一职位上待了4年。而另外一边俞正声在2001年从建设部部长任上调到湖北任省委书记，直到2007年转任上海市委书记，主政湖北长达6年的时间。而期间，孙志刚在俞正声到任1年后，从正厅级提拔为副部级，并早俞正声1年离开了湖北，前往安徽任职。可以说，他在俞正声任期内实现了2个跨越，一个是提拔，一个是跨省任职。俞正声的父亲是中国第1任机械部部长，还曾任天津市市长。还由于曾在北平做地下工作这个俞家族有一个很强的强势网络。他的母亲文革前的官位就高至北京市副市长。俞正声本人和中国前第1家族邓小平家族的关系也很密切，尤其与邓小平的长子邓朴方关系极好，曾是邓朴方的残疾人基金会下属的康华公司的大总管。康华公司在1980年代曾被中国学生当作腐败典型来反对。邓小平在世时是很希望提拔俞正声，曾在1992年内定俞正声为中央书记处书记，但是由于高层反对意见太多，尤其是对他参与这个康华公司的经历，所以最后俞正声甚至没有进入中央委员会，以担任这个中央书记处书记的希望也破灭了。而另一个常委级别的人物就是吴官正。这名中国时政观察人士向华尔街电视频道进一步表示这一次孙志刚被查，可能表面上和俞正声有关，但实际上或许是和吴官正有关。这名中国时政观察人士更进一步揭示了孙志刚和吴官正的关系，称孙志刚在80年代初他是一个非常难得的人才，因为在当时他已经就是研究生了，非常难得。在武汉呢，吴官正是孙志刚的伯乐。关于吴官正家族的贪腐问题，其实中共党内一直也在说。那其实吴官正被人议论之事是一直没有断过。前些年，中共政治局前常委这个中纪委前书记吴官正在退休之后常常在这个报道上你能看到他在谈反腐，并在其出版的书中声称最看不惯有的干部一有权就谋私等等。实际上，吴官正家族的巨大贪腐丑闻不断也被曝光。有知情人士说吴官正在政商两途都有人几个儿子呢是文武皆备，形成了互保互协的局面。据香港媒体早几年的披露，吴官正的3个儿子分别是吴祖华、吴少华和吴汉华，都凭借着吴官正的权势发财。其中吴祖华是从事房地产行业，担任青岛市天翼海湾置业有限公司的董事长，已被判终身监禁的前青岛市委书记杜世成案件就与他有关。吴祖华在青岛抛售土地，非法获利高达21亿元人民币。此外，吴祖华还涉嫌交通银行广州分行100亿违规贷款案件。那在吴官正担任中共政治局常委、中纪委书记之后，吴少华则是进入光大银行总部，担任营业部的副主任，半年之内出任该行中共党委成员，1年后担任光大银行总部人力资源部总经理。除了非同寻常快速升职之外，吴少华不但在光大银行大发不义之财，而且也参与了许多商业生意，并获得暴利。在中共17大前，为了保全这个家族的安全，吴官正最小的儿子时任中共江西省证监局局长的吴汉华进京任职，出任中共中国证监会党委宣传部部长。出于某种原因，吴汉华化名为江波，于2008年7月是挂职河北省省长助理，主管金融，在2009年转正为河北省省长助理。据河北省政府的官方网站消息，2018年8月4日免去江波河北省 省长助理职务。此时他已经是担任了10年的省长助理，历经4任省长。好了，以上就是今天热点深度的所有内容。更多资讯可以关注6度简报网，网址是6度brief.com， 在上面各位可以订阅各类符合您喜好的简报新闻，有免费套餐，也有更加专业的付费套餐供大家选择。今天的视频就到这里，我们下个节目再见。
突发，中国留美博士生涉嫌枪杀老师，留言想交一些新朋友。美国北卡罗来纳州大学教唐山分校 UNC 8月28日，也就是今天下午发生枪击案，犯罪嫌疑人已被拘捕，是该校应用物理系博士生齐泰磊，译音 TIOH， 来自中国武汉大学物理系。6度简报通过多条线索发现了齐泰磊多条信息，包括他在社交媒体的留言。该校警察局常布莱恩·詹姆斯 Brian James 表示，枪击事件中使用的枪尚未找到，嫌疑人于下午2点31分左右被拘留。警方表示，在提出正式指控之前，不会公布嫌疑人和受害者的姓名。不过，当天下午，警方宣布正在寻找与武装和危险人员局势有关的嫌疑人，发布一名男子的照片，要求任何看到这名男子的人保持距离并拨打911。照片中的男子与该校应用物理系博士生齐泰磊，译音 TIOH 的照片相符。齐泰磊自2022年1月加入北卡罗来纳大学教唐山分校应用物理系的研究小组 EM Research Group， 指导教授是同为华裔的严资杰，译音 ZJ。 齐泰磊毕业于武汉大学物理系，并在美国路易士安那州立大学取得材料科学与工程硕士学位。事发时，北卡罗来纳大学警方指示公众远离校园内的化学大楼考迪尔实验室 Caldwell Labs， 警方没有提供与该实验室情况相关的任何资讯。北卡罗来纳州大学教唐山分校28日下午1点03分发出警报，通知社区校园内或附近有武装危险人员，要求校园内所有人立即进入室内并避开窗户。当天剩余时间的课程和活动已被取消，公交车也暂停运营。该校校园在封锁3个多小时后，校方于4点14分发出通知，表示一切正常，恢复正常活动。教唐山市所有学校在下午2点15分进入安全模式，所有建筑物关闭和上锁，在当局解除警报前，任何人不得进出。下午3点40分，该学区收到当局的解除警报，得以疏散学童，开始小学和初中的放学程式。齐泰磊在 X 上写道，他想交一些新朋友，说他日常琐事有点傻。在 X 上 T 写道，研究生 at UNC， 从事光物质相互作用和相关材料。他最近的一篇文章是，你是如何找到你的博士后职位的？他还转发了一个人关于中国台风的推文。他写道，想结交一些新朋友。我是一名2年级博士生，对那米粒子合成、光学捕获、自组装、光谱分析和 ML 感兴趣。日常琐事有点傻，非常热衷于谈论研究。如果休息不舒服，请联系我。同一天，他写道，什么是真理？6月的一篇文章写道，当这种女孩表现出她最好的祈求别人说明我时，所有人都会看不起我。有点天使般的 B 星号星号。目前尚不清楚他指的是谁。他还写道，社会上的许多直觉情况，最低工资对保护穷人的伤害更大，性别配额不是为了保护妇女，而是为了加强歧视。5月，他写道，这类人实际上可能是一个好人，但可能不是一个真诚的朋友。对于一个博士生来说，每天非常注重工作时间真的很幼稚。我知道很多人想让我向他们展示工作和工作，但没有，那根本不是人。
Many of us have watched China for years, appreciate that the magnitude of the economic challenges China must address now are not new. Rather, they have been worsening for years and were amplified by COVID and the poor policy choices made during that time. Notwithstanding the CCP's push for Chinese households and non-state businesses to drive recovery in 2023, household consumption has been cautious. Government lending practices continue to favor unproductive state-owned enterprises, higher-performing non-state sector at the expense of higher-performing non-state sectors. In most cities, property prices have plunged, and business confidence has eroded as deflation sets in. 2 years ago, we reported on the rising concerns related to debt and demographics. Those challenges are only intensifying. Over the past decade, China's banking sector has grown from $9 trillion to a staggering $56 trillion in assets. Those assets are somewhat questionable. By the end of 2022, China's debt-to-GDP ratio exceeded 297%, more than double what it was in 2008. This unprecedented expansion in credit largely flowed into a building boom that contributed roughly 30% of GDP. More troubling in terms of the human dimension of the problem, in terms of economic instability and political confidence in the CCP, roughly 70% of household wealth is tied up in the real estate sector, which experienced across the board significant declines in sales, starts, and land purchases for building. China simply cannot sustain the policy approach of credit expansion, nor will it be able to continue to shield unproductive entities from default. After 20 years of relying on debt-fueled stimulus, China confronts twin challenges of lacking viable infrastructure projects sufficient to stimulate growth, and developers and local governments overburdened with debt. Whether local governments and the opaque funding vehicles they create to raise money are stable and sustainable is very much in doubt. A recent report indicated 43 LGFBs failed to redeem maturing commercial paper. Was this due to a lack of investor confidence? Adding to these significant challenges, by mid-23, China's official youth unemployment rate had soared above 21%, at which point the party of state abruptly stopped releasing data. Although transparency into China's economic data is vanishing, the country's economic weakness is now far too pronounced for the CCP to hide. For years, we talked about shadow lending as a challenge. Now the problem is shadow data. International investors cannot have confidence in buying stock on U.S. exchanges or directly investing in China if data are inadequate, misleading, overstated, censored, or withheld. Our fabulous witnesses today have deep and diverse expertise researching China's domestic economy and supply chain policies. I'm pleased that 4 or 5 have not previously testified before the Commission and bring forward new perspectives on key elements and outcomes of China's economic model. I'll now hand it over to my co-chair for the hearing, Commissioner Glass, who will introduce the panels and make some compelling remarks.
Thank you, Commissioner Cleveland, and good morning, everyone. Today's hearing will call into question the health of China's economy and the overall implications for the CCP's influence over technology supply chains. The party's state dual circulation strategy aims to eradicate its own external vulnerabilities while increasing the world's dependence on Chinese technology. Today, U.S. policymakers are moving to address some of the risks stemming from supply chains that are overly dependent on China. However, much more remains to be done. In May of this year, the Biden administration announced that the United States aims to de-risk its relationship with China, focusing U.S. policy on fortifying areas core to U.S. national and security interests. Congressional action through the Inflation Reduction Act and CHIPS and Science Act took major steps towards diversifying U.S. supply chains in semiconductors and clean energy technologies if implemented properly. Nonetheless, these efforts are still early, and further action is needed to reduce U.S. other vulnerabilities to Chinese control over critical supply nodes, from pharmaceuticals to green energy. The recent spike in Chinese electric vehicle production and exports exemplifies the party state's ongoing efforts to expand control over crucial segments of global production. U.S. businesses are discussing options to de-risk their own operations, but China is simultaneously moving to ensure U.S. companies and investors remain intertwined with Chinese markets. While a 19% drop in trade with China and a nearly 90% drop in foreign investment in China in the previous quarter may be seen as a signal of decreasing reliance on Chinese markets, overseas investments by Chinese companies simultaneously surged. Chinese companies are looking to offshore production to other countries in Southeast Asia and even Mexico, evading tariffs by locating production in other jurisdictions. They are also continuing to export through other secondary markets to avoid tariffs and also customs scrutiny under the Uyghur Forced Labor Prevention Act. As a result, even where trade data shows a decrease in direct U.S. dependency on China, the true value of Chinese content in U.S. supply chains is much higher. This hearing provides an opportunity to consider the kinds of guardrails that businesses can follow to address these increasingly complex supply chain risks. Before we begin, I'd like to remind you all that the testimonies and transcript from today's hearing will be posted on our website. I'd also like to thank the Senate Committee on Health, Education, Labor, and Pensions for securing this room for our use today, and the Senate Recording Studio for their assistance in live streaming this event. We'll now begin today's hearing with our first panel. I've had the honor to introduce our first panel today. Our first panel will provide an overview of the economic and financial challenges confronting China today. We will also explore how these issues impact the global economy and how investor sentiment toward the country is changing. We'll start with Dr. Logan Wright, who is a partner at Rhodium Group and leads the firm's China market research work. His testimony will provide an overview of China's economic and financial challenges. Next, we'll hear from Mr. Nicholas Borst, who is appearing virtually. Mr. Borst is Vice President and Director of China Research at Seafarer Capital Partners, and he will discuss China's fiscal challenges and investor sentiment. Finally, Dr. Zhang Nguyen Zoe Liu, and I hope I'm pronouncing that somewhat correctly, will provide her testimony. And please correct me. Dr. Liu is the Maurice R. Greenberg Fellow for China Studies at the Council on Foreign Relations, and she will address the role of state-owned capital, particularly China's sovereign wealth funds, in financing the country's domestic and overseas ambitions. Thank you all so much for your testimony and appearing before the Commission today. We all look forward to hearing your remarks. I ask all the witnesses to please keep the remarks to 7 minutes. Dr. Wright, we'll begin with you.
Thank you, Commissioner Cleveland, Commissioner Glass, all the commissioners and staff for your kind invitation to testify at this important hearing today. My testimony focuses on 3 principal arguments related to developments in China's economy and financial system and their implications for the United States. First, the severity of China's ongoing economic weakness is still widely underappreciated, and the United States no longer faces a growth challenge from China. Beijing is no longer an economic pacing threat or likely to overtake the United States in any significant measure of economic power in the next 2 decades, assuming U.S. growth continues at roughly current rates. Beijing will never be able to make a credible claim to global economic primacy. The challenges the United States faces in strategic competition with China are highly significant, but they will not be impacted by marginal changes in China's economic performance in the years ahead. China's current economic slowdown is structural in nature. Simply put, most of the factors that contributed to China's rapid growth over the last 2 decades cannot be repeated in the next decade. These include an expanding labor force, unprecedented credit and investment growth, a booming property sector, a one-time buildup of infrastructure, and a constructive external environment. Most analysts agree that growth in China will not recover to its previous rates, but there's still considerable disagreement about how severe the slowdown will become and the implications of those changes for the United States. One of the least understood aspects of China's economic record over the past decade has been the linkage between the rapid growth of China's financial system and its economic performance. China's current economic slowdown is structural primarily because the credit and investment expansion that took place from 2008 to 2016 was also unprecedented. This was the largest single-country credit expansion relative to global GDP in over a century. Credit growth of this magnitude not only powered significant volumes of local government investment and property construction, but most importantly, it provided a shock absorber insulating China's economy from bankruptcies, defaults, and unemployment. And that credit expansion has ended. China's economy, as measured through GDP in 2022, is around 2/3 the size of the U.S. economy in dollar terms, 65% at current exchange rates, even based on China's suspect official data. Given China's long-term economic challenges, there is no realistic scenario in which China's economy becomes 150% or 200% of U.S. GDP in the future, surpassing the United States by a wide margin. The United States will continue to be challenged by China's military buildup related to Taiwan and the South China Sea, China's outsized and politicized influence within specific next-generation industries and manufacturing supply chains, economic policies artificially boosting Chinese firms' competitiveness, and behavior to influence democratic political systems around the world. Those problems are exactly where U.S. policy and legislative efforts should focus. But none of these military, diplomatic, or ideological areas of strategic competition with China will be changed by marginal adjustments in China's economy from current levels, even if China were to improbably reach the level of U.S. GDP. And China's slow pace of economic growth is more likely to weaken Beijing's capacity to confront the United States and its allies in these areas, rather than rapid economic growth boosting China's capabilities over time. Second, Beijing is attempting to downplay public recognition of China's economic slowdown, both inside China and internationally. The most important propaganda message for China's leaders related to the economy is that the argument that China's economic rise is inevitable and that this will reinforce China's rise in great power status. Chinese leaders believe they can influence the narratives about the economy through conventional domestic propaganda, but also by restricting the availability of economic data and stories they dislike. China's economic data, meaning the data points likely to generate media coverage such as GDP growth, should be understood as critical elements of China's internal and external narrative management concerning the economy. Tighter controls over data and censorship of discussion of China's economy should also be understood as reactive responses to real uncertainty among economic actors in China about Beijing's policymaking. The narrative about China and its economy is important to the United States. The success or failure of Beijing's policymaking in an state-driven economic model determines not just the relative performance of these two competitors, but the attraction and hence the global soft power of the Chinese system and its ability to displace commitment to traditional liberal democratic and market economic norms. Third, the property and local government debt crises in China are intrinsically linked. As credit growth slows, investment growth will follow, and significant proportions of that credit and investment have been channeled into property construction and infrastructure over the past decade. Property developers delayed a long-anticipated slowdown in the industry by relying upon increasingly risky forms of financing, such as the proceeds of housing sales before actual construction took place. This introduced a Ponzi-type element into the financing of China's property sector. As sales suddenly declined, a trend that was exacerbated by lockdowns in major cities in 2022, property developers not only struggled to complete construction of homes they'd already sold and promised to deliver, but also stopped buying new land from local governments. Local governments' fiscal revenues are heavily dependent upon these land sales, and the sudden loss of revenues has made it far more difficult for localities to service debt accrued during the last decade, as this investment was not funded directly by fiscal spending. The property sector's adjustment has been severe. New housing starts are down over 50%, 60% from their peak, and there's no easy solution for the local debt problem without changing China's entire growth model to make it less dependent upon investment. The structural slowdown in China means that the United States can be more narrowly concerned about the national security implications of specific economic transactions, rather than whether or not a particular action will help or hurt the Chinese economy as a whole. There is a significant national security concerns related to the transfer of advanced technologies with military or dual-use applications, but there's little at stake for the United States and U.S. or allied investors buying stocks in Chinese consumer-focused companies or Chinese government bonds. Most trade and investment activity between the United States and China is mutually economically beneficial and poses no national security concerns. U.S. commitments to free market principles are a valuable asset that facilitates greater alignment among our allies and partners, many of whom will be far more reluctant to impose trade and investment restrictions upon Beijing. Given the challenges that Chinese behavior and economic statecraft poses, de-risking from China's economy is widely supported and necessary. But in a decade in which China will slow significantly independently of any action by the United States, we can more confidently keep the limits around U.S. and allied economic engagement with China narrow. Thank you.
Mr. Borst, is he online?
Yes, can you hear me?
Thank you.
Well, thank you so much. Thank you so much. And I'd like to start by thanking the commissioners for the opportunity to participate in today's hearing. I will relay my observations from reviewing China's recent economic data and visits to 10 different Chinese cities over the course of this year. The Chinese economy is currently in a weak position. While the economy performed well in the early years of the pandemic, growth decelerated sharply in 2022 due to lockdowns and a severe decline in the real estate sector. Since Beijing abruptly reopened the country at the beginning of the year, the economic situation has improved somewhat. However, activity is substantially weaker than many of the projections made at the beginning of 2023. China has not only failed to have a reopening boom, it is now in danger of losing economic momentum. The current state of the Chinese economy can be primarily attributed to three policy decisions made over the past several years: a failure to moderate the real estate deleveraging campaign, a crackdown on the private sector that has damaged business confidence, and a failure to adequately prepare for the post-COVID era. Equally important, the Chinese government has backtracked during this period on addressing fiscal imbalances between the central and local governments. This has created new financial risk and further hindered the country's economic recovery. The first policy mistake was the real estate deleveraging campaign. In 2020, the Chinese government decided to push ahead with a major restructuring of the property sector. A primary focus of this effort was to force property developers to deleverage their balance sheets. However, these policies soon created a severe financing crunch across the entire industry. The riskiest and most over-leveraged property developers ran into trouble first, but the financial stress soon expanded to the entire sector. No longer able to obtain financing, property developers began pausing work on new housing projects. Many Chinese homebuyers who had pre-purchased apartments refused to make mortgage payments, fearing that their homes would not be completed. The government has since tried to unwind many of these policies. However, the property market remains weak and financing challenges for real estate developers have not been resolved. The second policy mistake was the crackdown on the private sector. In late 2020, Chinese regulators initiated a sweeping and unpredictable campaign that became known as the regulatory storm. Chinese social media and e-commerce platforms were forced to restructure their business models. Certain industries, most notably the private education sector, were nearly regulated out of business. China's creative industries faced stringent new censorship rules and a freeze on content approvals. The retail, payment, and consumer lending industries were put under new regulations that fundamentally crimped demand. At the same time, the Communist Party redoubled its efforts to establish party organizations within private companies and exert greater control. The cumulative effect of these new policies has been devastating for many of China's leading private firms and has contributed to the sharp decline in private investment. The third policy mistake was the lack of planning for the post-pandemic era. At the end of 2020, it became clear that effective COVID-19 vaccines were possible and that countries needed to begin adjusting their approach to the pandemic. However, China held steadfast to a zero-COVID policy that effectively sealed it off from the rest of the world. While most countries unwound pandemic controls in 2021 and 2022, Chinese authorities engaged in a series of strict lockdowns and quarantine measures. The economic damage from these lockdowns was tremendous, especially to small businesses who received insufficient government support. This has had a direct impact on high levels of youth unemployment today. And even though pandemic restrictions have now been lifted, consumers are understandably cautious and unwilling to increase their spending. Perhaps most importantly, Beijing has failed to address local government debt problems during this period. The severe fiscal imbalances between the central government and local governments are at the heart of many distortions in the Chinese economy and are the most pressing financial risks facing the country. Local governments have borrowed extensively, both directly and through off-balance sheet vehicles called LGFVs. While some of this investment may be going into useful projects such as infrastructure, there is also likely to be a significant amount of waste. Further compounding problems, most LGFVs have limited cash flows and must rely on new financing. To remain financially solvent, LGFVs must either continue to borrow or receive financial support from local governments. However, the financial condition of local governments has deteriorated due to lower land sales and high levels of pandemic spending. This has increased the risk that local governments may no longer be able to bail out struggling LGFVs, leading to an increase in defaults. China's unresolved debt problems mean that the economy is likely to continue slowing. Beijing's past approach has been to muddle through by providing support to struggling borrowers and relying on rapid economic growth to lessen debt burdens over time. However, this is unlikely to work well this time. The economy's slowing trajectory means that China cannot easily grow its way out of debt. Additionally, local governments are constrained in their ability to support the economy due to highly indebted balance sheets. If China neglects to undertake important fiscal reforms, it faces the risk of a prolonged period of slow economic growth. Fiscal reform could be an opportunity to set China on a path towards more rapid growth and address many of the core imbalances in the economy. However, I believe this course of action is unlikely given that many of the adjustments required directly conflict with the ideological priorities of the Xi Jinping government. While these issues are primarily domestic for China, I believe there are implications for the U.S. The economic challenge from China has changed. China's economy has slowed and it is unlikely to recover its rapid growth trajectory. The Chinese government is likely to be intensely focused on efforts to address its own internal economic challenges over the next several years. The party's efforts to exert greater control over the private sector have damaged some of the most dynamic and innovative parts of the Chinese economy. And Chinese local governments will have fewer financial resources to support Beijing's policy initiatives and stimulate the economy. China's economic slowdown, combined with the strong performance of the American economy, provide U.S. policymakers with a strong negotiating position. China needs foreign investment and access to overseas markets to sustain its economy. China is still one of the United States' most important export and investment markets, and improving conditions for American companies doing business with China should be a priority. The current moment is a favorable one to seek greater market access and other reforms that will directly benefit American firms and boost exports. Thank you.
Thank you. Dr. Liu?
Thank you, Chair Cleveland, Chair Glass, and commissioners, as well as all the staff members of the U.S.-China Commission. I really appreciate the opportunity today to testify in front of you with regards to the role of China's sovereign funds in finance the Communist Party of China's global ambitions. For the past 2 decades, China's sovereign funds have played a significant role in China's economy, mitigating financial crisis, and tempering exogenous shocks. They have supported China's industrial policies by financing the state's procurement of strategic overseas assets, bankrolling Chinese enterprises' mergers and acquisitions abroad, and sponsoring the development of indigenous Chinese technological startups. I would like to make 3 points today. The first point is that while the Communist Party of China first leveraged the foreign exchange reserve to establish such a sovereign funds, for what that first time was to address a domestic financial crisis in the early 2000s. But despite the first time was crisis-driven, since President Xi Jinping came to power, the Communist Party of China and the Chinese government has been more proactively using foreign exchange reserves to finance its global ambitions. And my second point is that the Chinese sovereign funds have evolved and changed their investment strategies in response to enhanced investment screening. In areas where direct investment became more difficult, they choose or they have resorted to establish joint ventures and partnerships to mitigate scrutiny risk. And my third point is that China's sovereign funds and their overseas assets are not necessarily uncompromised strengths, but actually they can be strategic vulnerabilities. And this means that the Chinese government is likely to advance the development of alternative non-dollar-based financial infrastructure and financial system to reduce their strategic vulnerabilities. Now let me elaborate on these 3 points. The first time that the Chinese government leveraged its foreign exchange reserves was to create Central Huijin back in 2003. And at that time, Chinese banking system was crippled with non-performing loans. But since President Xi Jinping came to power and the rollout of the Belt and Road Initiative, or the so-called BRI, has motivated the party to leverage China's foreign exchange reserves as a strategic financial power to advance China's overseas interest. Since 2013, the party has used foreign exchange reserves to replenish Chinese policy banks, establish several new sovereign funds, and these include the Silk Road Fund, China Latin America Production Capacity Corporation Investment Fund, China Africa Industrial Capacity Corporation Fund, and the Guoxin International Investment Corporation Limited. The Silk Road Fund in particular is a good example. It is created by the President Xi Jinping to finance the Belt and Road Initiative, and has since then, is not just invested in overseas strategic assets, but also financed Chinese companies' overseas acquisitions, including supporting COSCO shipping port in investing overseas port project. And on top of supporting China's overseas acquisition, Silk Road Fund has actually also received a second-time capital injection using renminbi back in 2017. And the purpose of using renminbi to recapitalize the Silk Road Fund was, on the one part, to strengthen its capital base. On the other part is also to advance the capacity of the Silk Road Fund, and through the Belt and Road Initiative, to broaden the renminbi's use through regional and multilateral frameworks. And this brings me to my second point, which is Chinese sovereign funds have evolved and changed their investment strategies over the years. In an area where direct investment become more difficult, they established joint ventures. For example, Silk Road Fund is the sole sponsor of a 2 billion China-Kazakhstan Production Capacity Corporation Fund, and China Investment Corporation, since 2016, has also been resorting to multilateral investment partnerships. And my third point is that Chinese policy thinkers, they have realized the strategic vulnerabilities that China's overseas investment has exposed them to. Therefore, they have learned, in particular, they have learned the lesson from Russia's war against Ukraine, as well as the West's collective sanction against Russia. Therefore, the current policy debate inside China is not necessarily with regard to how to further diversify foreign exchange reserves, because diversification cannot diversify away systematic risk for the Communist Party. In this current scenario, it means a war, possible militarized contention with regard to Taiwan. Therefore, they are likely to further promote the development of alternative financial system that is not necessarily based on the US dollar. And I will stop there. Thank you.
Thank you so much. Do you want to?
Mr. Wright, I'd like to begin with you, just so that I have a very, very clear picture of what's at stake. In your testimony, you talk about LGFVs borrowing from banks representing 76% of debt, and then bonds issued are 1.8 trillion, and then another number was the total debt is 7.45 trillion. Can you do sort of a cascade for me of sort of what's the total debt at the local level, what's bonds, what's loans, and what do you view as inherently riskier in terms of the overall economic picture?
Sure. Basically, total local government debt is around China's GDP, somewhere between 90 to 110% of GDP, meaning somewhere between, 16, 17 trillion dollars. The riskiest part of that is probably what is happening in short-term payables, in privately placed notes, and in the corporate bond market. So short-term payables are 6 trillion yuan, so something close to $800 billion. Total local government interest-bearing debt is 54 trillion yuan as of the end of 2022. So something close to $8 trillion or so. And the riskiest part of that interest-bearing debt is the corporate bonds, which have been shrinking in duration and around 13.5 trillion yuan. Average duration on those LGFV debt is around 2.5 years. The remaining portion so in total, all of that LGFV accrued debt is about half of the stock, which is about half of China's GDP. So the remaining portion, there's an explicitly guaranteed by Beijing local government bond issuance that is explicitly issued. That's 36 trillion yuan as of the end of 2022. So that's about 30% of GDP. And then there's an unknown portion, which is stuff issued by schools, hospitals, other government affiliated institutions, the local level that nobody really counts. That's probably also implicit. So roughly we're talking about 70% of GDP, or roughly $11 to $12 trillion in debt that needs to be restructured. And the problem with local government debt restructuring is not just the stock, but the flow. What happens not only when you manage the existing, obligations and prevent the immediate financial market risk on a wide range of assets that are perceived to be guaranteed in China's financial markets, but how do you more sustainably finance investment in the future at a lower rate?
And as you see it now, what entities are responsible for purchasing each of these pieces of the pie? Because in my pea brain, I just see this as the debt just keeps washing through the system, and the policy banks buy, and then they push it off on a regional bank, and it just keeps money washing through the system.
Yeah, my colleagues at Rhodian Group have done a lot of work on exactly where this concentration of lending is held within the Chinese financial system. So the most exposed would probably is not in the bond portfolio, but the loan portfolio. And around loans to LGFVs around 20 to 25% of the total loans in China's banking system. So it's quite a high level of exposure. And the banks that are most exposed are most likely to be city commercial banks. Within the bond portfolio, and so the smaller city banks that kind of serve as quasi-fiscal institutions to Chinese cities and towns. Mm-hmm. Among the bond portfolio, the highest exposure is among privately placed notes, privately placed LGFV notes, because those are shorter term in duration and we don't really have great visibility about where the holdings are. What happens in China's system is that there's still a shadow banking component where banks will sell products from third-party institutions that will then try to basically add leverage or obtain higher yielding assets in order to repay investors at higher rates. And LGFV bonds were a good source of yield because everyone assumes them to be guaranteed by the government, but they're still trading at a premium to government bonds. And so that's a reasonable place to go search for what is seen to be safe yield. And that's where you have greater exposure within some of those shadow banking components, trust companies, asset management companies, in some cases brokerages, asset management arms. That's where the exposure, I think, is most concentrated at this point. That's kind of what we can say. It's still unknown exactly where all of this can be concentrated.
And in all of those instances, are the assets owned exclusively by Chinese entities, or is there access to foreign investors, access by foreign investors?
There is some foreign ownership of China's onshore corporate bonds, but it's extremely small. There is some foreign ownership of LGFV debt issued offshore, but that is also extremely small relative to there's not really a significant foreign component. Everyone likes to say that China's debt is all owed to itself, that this is a left pocket, right pocket game, that this can all just be reorganized internally. That is a politically fraught process because what you're actually talking about in that case is who is going to bear the losses, not just, and how those losses will be allocated within the system and the implications that has for future growth and the stability of that system. The problem now is that all of this borrowing is implicitly guaranteed. Someone in Beijing needs to decide that we need to expose certain borrowers to market risk and therefore risk some of these loans being cut off or not being rolled over. And someone has to decide that that's enough market risk and not too much that might spill over into broader contagion or financial crisis. That's difficult.
Do you see that, I'm sorry, I'm way over time. Do you see the article that was in Nikkei magazine a few months ago where 43 LGVFs did not roll over their paper? Did you see that as an indicator of Beijing suggesting that they're going to let some of these localities go?
I think that is I don't view it as an indication that Beijing has made that decision yet. I think it is an indication of the financial stress that is building upon local government financing vehicles. The payables, the short-term corporate acceptances, we also see other evidence of even more defaults. We can track those on a monthly basis, and they've been rising very steadily. So it shows that local government financing vehicles are not currently able to meet their obligations within their existing debt burdens, and Beijing needs to intervene to restructure that debt. I don't think, the Politburo called for a comprehensive plan to address local government debt as of their late July statement on the economy. But I don't think the fact that some of these instruments have defaulted necessarily indicates that there's a decision that's been reached about what to do about this or to allow some cities to default or some types of bonds to default. Those are very, very difficult decisions.
Thank you. I have questions for the other witnesses if we have that time.
I will go next, and then we'll go in alphabetical order. First, thank you to all of you for preparing such great testimony and appearing before us today. I'm really struggling here a little bit. I think all of you have are mirroring each other in what you're saying in terms of the economic slowdown. Is the trajectory over the next decade, the next couple decades? Is it over the next 5 years? You know, I'm not sure what the crystal ball says, but I think, you know, I think policymakers in Washington, rightly so, Dr. Wright, you pointed out in your testimony, people need to ingrain this as part of their thinking about what's happening to the Chinese economy. Are we getting out front as aggressively as we should about the implications to the U.S. economy if the Chinese economy continues to slow down? Not just risks to U.S. investors who are making investments in China, but also to our own sectors here at home. And what could Congress be doing right now in anticipation that this will have serious implications, not just here, but globally? So I'll start with you, but Mr. Borst, Dr. Liu, feel free to chime in.
Thank you. I mean, I think that the primary immediate spillover that we will see is not only is through disinflationary pressure or potential deflationary pressures through China's currency and through global commodity prices, which is what we've started to see some of this dynamic already, in which case some of that pressure is salutary for the U.S. economy, taking some pressure off of inflation, but that channel is fairly limited, I mean, given the low level of U.S. imports relative to the overall price level. So the concern, I think, is about China no longer being a source of growth in the region for our allies and partners as well, and the potential for greater disinflationary pressure from China's currency, if you will, feeding into competitive pressures to devalue other currencies as well. So let me just stop there.
Are other witnesses?
Sure. I'll just add a couple of remarks. You know, I think, at least in terms of the financial markets, the slowdown in China is well understood now. It's very reflective in the performance of the major Chinese investment indices over the course of this year. So I think there's a lot of transparency and look through to a pretty broad consensus that the Chinese economy is slowing. In terms of the direct implications for the U.S., you know, obviously, despite the slowdown in the bilateral trade relationship, China continues to be a major export market for a lot of U.S. companies, and so that will certainly impact their growth. China is also a major investment-focused market for a lot of U.S. investors, and so that will ultimately filter through to lower investment returns going forward. I think, you know, this notion of China's slowdown is much broader than just the country itself. I mean, in many ways, it has been kind of the heart of growth in the Asian economic region. And so to the extent that China continues to slow in the way that many of us are predicting, it will have a direct economic impact on many of our allies in the region who have huge economic ties to China. So I think, you know, the impact on growth will be significant. But I would also say that, you know, there's a variety of different ways that this could play out. I think there's a pretty broad consensus that the growth miracle is over, that we're not going to see Chinese growth go back to 8 or 9%. But there's a range of other outcomes that can occur, and that could be a relatively soft landing, something in the 3 to 4% ratio, or if they don't handle many of these financial risks that we've covered, it could be something much lower and much more volatile than that.
Thank you.
Thank you very much for the question. I will make 2 points. The first point is with regard to the deflationary pressure right now. And it's likely that the deflationary pressure in the Chinese economy could be transitory, could be temporary, because the component driving consumer price down right now from the latest data mainly comes from significant reduction in pork prices that can potentially be temporary, and but if this became a prolonged process, then a deflationary Chinese economy would also mean the Chinese export prices could be cheaper, and that makes Chinese goods more competitive in global market. The second point that I would want to make is that a slowdown of the Chinese economy, yes, would relieve some of the commodity prices from oil to gas, but that does not necessarily mean every commodity prices would go down, because in areas where the Chinese government put a lot of emphasis in, such as chips, such as electric vehicle, such as renewable technologies and renewable energies, for those critical mineral demand in China is still going to be very high. Therefore, even the Chinese economy slows down, it does not necessarily mean every country would be impacted to the same extent.
Thank you. I will now recognize Chairwoman Bartholomew. Chairwoman, you're on mute.
Sorry about that. Thank you very much, and thank you to our witnesses for their testimony. I guess what I'm trying to think about right now is what are the implications both within China and how China's model is being perceived elsewhere in the world as a result of these economic problems? I mean, I know watching them, the people of China going through COVID and the faith and their trust in the system that was quite shaken by the lockdowns, for example. Do you think that it's having any impact within China on people's trust or faith in the ability of the CCP to manage the economy in a way that benefits people? That's the first piece. And then the second piece is for countries around the world that have been finding the Chinese model attractive, economic growth and authoritarianism. Is there any evidence that these structural problems might be having any impact on how these countries are finding this as an attractive option? That's for any of you.
I can start on this, and happy to yield time to my panelists. I think the events of the past few years really have shaken a lot of faith in the Chinese economic model. There has historically been this implicit guarantee between, the party and the people of, stay out of politics, focus on the economy, everything will get better over time. The severe direct impact on many people's day-to-day lives of COVID lockdowns have shaken that for a lot of people. And so I think a lot of people are cautious about what the future means. And that's one of the reasons why we haven't seen this real strong resumption in consumption spending that a lot of people were predicting. I think a lot of people's outlook on the future has changed for the negative. And that's also quite true in the business world, where China previously had a very vibrant, dynamic private sector, really made a lot of progress throughout the 2010s. And then I think the regulatory storm that I referred to at the beginning of my testimony really shook confidence in that. You can't have big modern companies without rule of law. And when you implement policies in such a non-transparent, draconian way, that really shakes the confidences of businesses. People lose confidence to invest in the future. They don't believe that their assets will be safe. They believe, a government regulatory policy could come down at any time and really, fundamentally disrupt the business model on the businesses that they have spent so many years building. So in a variety of different ways, I think it really has shaken some internal domestic confidence. And then as we've all kind of hinted at, the key role of local governments within China's economy is changing now. And that's really due to the high levels of debt that they are now burdened with. So local governments have been a key player in the real estate boom. They're a key player in stimulating the Chinese economy during downturns. And they've been a key player in many of Beijing's kind of national level policy priorities, whether it's, creating a semiconductor industry or Belt and Road projects. So now that these financial constraints are growing ever larger for local governments, they're just not going to be able to play that same role. And so one of Beijing's, key tools in its toolbox for stimulating the economy and pushing forward some of these national policy priorities is just not going to work as well as it did in the past. And then for the question about the global implications, I think that will take time to filter through. China's had such a strong economic track record for the past 2 or 3 decades. I'm not sure many countries were trying to model the Chinese economic system as a whole. It's far too distinctive and really driven kind of by the party and state dynamics that are so important in China. But the idea of a real focus on infrastructure-led development, I think we're seeing the kind of natural consequences of when that goes too far, and I think that will have big implications for a lot of different countries.
Thank you. Do any of our other witnesses have anything they want to add?
If I could add one point just on the external, the external impact of the Chinese slowdown so far. I mean, it's obviously hard to monitor public opinion in other countries, but if you look at the Pew Research surveys that have been released recently, negative impressions of China have risen to all-time highs. The issue I would urge everyone to watch is how China manages negotiations on its external loans and its external debt. At this point, because that was really where the slowdown and the inability of the Chinese domestic system to absorb financial losses from some of these loans. And our own work illustrates that there's been about $88 billion or $78 billion in loans that are either in default or under renegotiation since 2020 alone in terms of China's external lending. And the way in which China participates in that process is going to be, I think, where the rubber hits the road for their external diplomacy, because it reveals the constraints of their own domestic political system at the same time, and their own financial stress at the same time as their external attachment to trying to provide debt relief and their engagement with the global South as well.
Dr. Wright, sorry, just quickly, do you see that there's going to be a slowdown in external lending? Because that certainly would have diplomatic consequences for the Chinese government also.
We have already seen a slowdown in external lending, basically since 2018, 2019, over that time frame, and the rising risk of defaults and renegotiations on those loans suggest that there will continue to be an ongoing slowdown in external loans.
All right. Thank you very much.
If I can just add 2 points very quickly with regards to the question about trust of faith and evidence with regards to what extent Chinese model might be appealing. So on the question about faith, I think right now what we are observing of the Chinese economy really is a run on confidence. And this run on confidence comes from both domestic and international. The reason I said that right now we are observing the crisis right now at this particular moment is because the timing worth considering. China's domestic structural problems have been existing for a long period of time. And there is a pretty good argument to be made saying that back around the time of 2009 or even 2012, a lot of these structural problems already drag the Chinese economic growth. But at that moment, those structural problems were not necessarily crushing the Chinese economy. But right now, it seems to be that there is a crushing moment. And I think this really comes down to a run on crisis, a run on confidence. And the run on confidence come from international and domestic. The domestic really comes from, on the one hand, consumer confidence index has been very downward trajectory. Since April last year to April this year, and April this year was the last time the Chinese government updated consumer confidence index, and they paused updating it. During this 3-month horizon, only 3 months, from January to this year to March this year, only the 3 year, those consumer confidence was above 90. Most of the time was below 90. So that basically means consumer in China are deeply not confident about the economy. And a part of the reason comes from their income growth has slowed down. And then part of that is they were waiting for the government to make more stimulus incentives. The idea, there is this popular saying these days on the Chinese social media. In Chinese, it's said, 你不买我不买，价格减200. Translating into English, it means if you don't buy, I don't buy, the price is going to go down by 200 yuan tomorrow. So next week. So from that perspective, policy right now is very much deflationary. Therefore, Chinese consumers, household, individuals are not confident about the economy. And for that matter, they have, at an individual level, they are also concerned that their economic security would be bogged down, or they might even fall victim to a broader geoeconomic confidence. And with regard to international, it really comes down to President Xi Jinping's policy swings and policy uncertainties generated lots of risk and uncertainty. So I'll just stop there with the interest of time. Thank you.
Thank you. Commissioner
Thank you very much.
Wow. So many questions in so little time. What a great panel. Thank you all very, very much. I started my own business in the early 80s, and within just a couple of years, we had all the savings and loans in the country go broke, largely for reasons that you're describing occurring in China right now, which is surprising to me a little, although I've been reading about it. So I have a sense of what's going to happen, because we had all the developers in the United States effectively borrowing against future promises, and then the market changed a little bit. We passed a law that changed, and everybody failed. All of you have talked a bit about the debt ratio to the GDP, and I understand that in the private sector in America, it's common to have a large loan with a bank where quarterly you have to talk about your debt versus your overall income. And when it hits a certain number, in my case, say in the 90s, we got up to around 2/3 of our gross, was our GDP. We suddenly had to come up with money to lower that ratio. So it's something that is common in business and government, and obviously not in China. I'm going to ask a question first of Mr. Borst, and then I guess in order, if we have time, Dr. Wright and Dr. Liu. Mr. Borst, you talk a bit about the debt to GDP ratio, and that strikes a chord with me, because I know that on the one hand, the local governments are running over 100%, but as a country, they're one of the best in the world, right, around high 60s. And America has continually increased for a very, very long time. In fact, we have the 12th worst ratio in the world, behind countries like Venezuela, Japan, Greece, Lebanon. Singapore and Bahrain all have worse ratios than us. Everybody else's is better. We're at like 128, I think, if I just looked. So my question for you, Mr. Borst, is if our ratio to GDP as a country is one of the worst in the world, why is that not a major disaster compared with China and what they're facing? It would seem like each of you has said that systemically the central government could bail them out, but probably won't. And I'm inclined to agree because of politics. But how do the two compare when ours is so high and theirs is so low? Are we at risk, really at risk, if they have a further slowdown?
Yeah, thank you for the great question. You know, the U.S. and China total debt to GDP ratio, if you're looking at both household, business, and government debt, is about the same. I think China has surpassed the U.S. in last year or two, but both about 300%. But the real issue, I think, is the structure of that debt. There's an issue at the first level of, you know, we think of economies as they advance have this process called financial deepening, and it's much more sustainable and normal for an advanced economy to have higher levels of debt. Well, China has hit advanced economy levels of debt at a much lower level of GDP per capita. So China essentially has rich country levels of debt at middle income levels of GDP development. So that's one problem. But the real issue is, again, the way that the debt is structured. And so you mentioned on the government side, it's true that the central government of China has a very low debt to GDP ratio. It's about 25%, which is extraordinarily low compared to most other major economies. You know, the US is about 100%. Japan is, 250%. So from that direct perspective, you could say, well, the Chinese government has all this fiscal capacity. But the problem is, as we discussed earlier, is the local government debt situation. And so a lot of debt that in other countries would probably be considered central government debt has been really foisted upon the local governments. And there's this core imbalance in China's fiscal system that I talk about in my testimony that has been the source of so many problems in the economy. And that is that Chinese local governments are responsible for about 80% of total spending, but they only get about 50% of the revenues. And so the central government takes more than its share of revenues. It does distribute that back to the provinces a little bit through transfers, but local governments in China are constantly facing a structural fiscal deficit. And so they have invented all sorts of ways to get around that. Part of that is making money through land sales, although that line of business has dried up due to the real estate correction. And the other has been these off-balance sheet vehicles that we've talked about, the LGFVs. And so local governments have used off-balance sheet vehicles to borrow heavily, to spend on their behalf. But the problem is that these off-balance sheet vehicles really don't have any revenues of their own. They're completely dependent on new borrowing or from financial injections from the local governments. And so this core issue of local governments having all these spending responsibilities, but not enough revenues to do it, hasn't been resolved, and until it's resolved, I'm very pessimistic about some of these financial problems. There are possibilities where they could take steps that I think would help change this. I talk about it in my testimony. You know, the central government could take on more of these debts, or could give more revenue to local governments, or they could finally sell some state assets to cover these debts. The problem is all those different policy choices are very difficult from an ideological perspective in China today, and so. You know, the debt levels are high, but the real problem is the way the debt is structured. And I think they're ideologically constrained from taking some of the steps that would be necessary to resolve that problem.
I think we're out of time, so I'm going to defer to the chair.
Thank you. Commissioner Friedberg.
Thank you very much, and thanks to all our witnesses. It seems that all of you, to the extent that you've touched on this point, seem to be agreed that China is headed for perhaps a sustained period of slower growth, and that the reason for that is something that's deep in the structure of the system as it currently exists. It's not just the result of short-term policy. So my questions, and I guess for all three, one, is there reason to believe that the CCP is perhaps okay with this? They might prefer that they were growing more rapidly, but they seem to be talking about making the point that growth is not the only objective, and that control and security and so on are critical. So first, is there reason to think that they're okay with it? And second, if not, what exactly could they do about it? And there's one answer to that that's implicit, I think, in some of the testimony, and that is that they could go back to the direction in which people thought they were moving 10 or 15 years ago towards loosening CCP control. If that's not likely in the short term, what are the alternatives for that? Could they push exports? Could they rely more on technological innovation? What could they do to get out of this corner? Mr. Borst, maybe we could start with you.
Sure, I'll just speak briefly because I want to leave time for the other panelists to chime in. But I think we are seeing a real struggle. I mean, we've seen over the past month or so a suite of new private sector reforms come out really aimed at, improving the operating environment for the private sector. I think at the end of the day, the Chinese economy knows they can't grow entirely through SOEs, that they need the private sector for employment, for revenue, and for innovation. But it's been difficult. I would note that even these private sector new reform initiatives still talk about increasing the role of party committees at private companies and having private companies support national policy objectives, which, in my opinion, are not great drivers of growth. So I think there's a struggle going on right now to figure out what the new driver of growth is. And from my conversations with Chinese economists, I think they're most likely to lean on the old playbook, which is just build more infrastructure, even if the country doesn't need it.
Okay, thank you. Dr. Wright?
Certainly. And I mean, I think that the way I would answer that question is that there's an understanding in China and Beijing that there are real constraints in the previous growth rate, but the forward-looking expectations are still very much contingent upon political objectives to double Chinese GDP by 2035, for example. And that requires rates of growth that are probably higher than what can be sustainably financed with China's system or under these new structural constraints. So it's more that the political discussion around, if you tell Chinese leaders that growth needs to be lower in the future, everyone can accept that. If you say that growth needs to be lower in the future, and that probably means that people are going to question whether we're inevitably rising in great power status, and that we're going to, and that the great rejuvenation of the Chinese nation will be complete, then that's unacceptable. And so then you get into these constraints about what can actually be done in terms of structural reform. And Dr. Friedberg, just in response to the question, I mean, I think you're exactly right. You need some sort of reinvigoration of the reform agenda that was put in place with the 60 decisions of the third plenum in 2013. And it's been obvious that there's been, initial attempts along those lines, and then rapid backtracking when the market implications, the economic implications of those reforms become apparent. So the problem now is that after 10 years of backtracking and more statist direction of the economy, how do you actually send that sort of, big bang signal that things are actually different? How do you credibly do it? Because there really is an inverse relationship between the concentration of political power and the credibility of some of these counter-cyclical and reform signals.
Okay, thank you. Dr. Liu?
Thank you for the question. And I would emphasize two aspects. The first part in terms of what the CCP, if the CCP is not okay with lower growth, what are they going to do? The two aspects that the CCP would emphasize, and they have given clear policy signals to do, is to emphasize incentivize consumer spending and to focus on efficient investment. On the point with regard to incentivize consumer spending, since last year, last December in particular, they put out for the very first time a strategic plan to expand domestic demand. And on the domestic demand expansion aspect, for the very first time, they prioritized incentivize consumer spending rather than focusing on government-led investment. And since the beginning of this year, there have been several policy guidelines focusing on ease consumer credit environment and all that. So from that perspective, incentivize Chinese household, in particular private consumption, is one important aspect. And they do have the reason to do that because right now private consumption as a percentage of Chinese GDP is about 40%, whereas the global average is about 60%. So from that perspective, the Chinese economy has significantly been under-consuming. And then the second point with regard to efficient investment, the primary aspect obviously is related to where the strategic sectors such as electric vehicle, quantum computing, artificial intelligence and all that, but there is also a very important or practical aspect that Xi Jinping is prioritizing, which is rural revitalization and focusing on not just land, farmland, but also food security, and the idea is to strengthen the rural base of the Chinese economy because major cities have basically been built out, whereas the further investment potential area would be the rural area.
Thank you very much.
Commissioner Goodwin.
Thank you, Madam Chair, and my appreciation to the panel. Dr. Wright and Mr. Borsch, I want to return to this conversation about China's efforts to address local government debt problems. And Chair Cleveland was exploring this early on in her question. But earlier this month, another Politburo announced what they refer to as a basket of measures to help address this challenge. And some news reports earlier this month suggested among those measures will be a refinancing bond program authorizing these local governments and municipalities to issue up to $140 billion in bonds to refinance outstanding LGVF debt with better interest rates. So I want your thoughts on the wisdom of that, essentially going into debt to repay outstanding debt, but also if you have any insight into the structure of those refinancing issues. Have they identified a dedicated revenue stream to pay the debt service on those bonds, and to what extent will the central government be involved in backing those issuances?
I'll start if that's all right. The problems in local government debt refinancing, it's really a fourfold problem that China has to grapple with all at once. First, you have the stock of existing debt. Second, you have the flow of how you're going to finance new investment in the future. Third, you have the entire basis of the central-local fiscal relationship and how you can more sustainably put local government finances, on a new plane. And fourth, you have a broader problem of how to raise fiscal revenues in this system altogether, because most of the tax system in China is heavily dependent upon investment-led growth and local government investment-led growth and the property sector overall. So this is a huge structural problem of which the measure you were discussing, the news announcement, is a very tiny first step in terms of alleviating some of the short-term financial pressure when you're talking about a trillion yuan or 1.5 trillion yuan. Something that would meaningfully address the stock of local government investment probably needs to be in the range of 30 to 50 trillion yuan. And ultimately, the only source of financing for this type of bond issuance to refinance older high-interest debt with lower interest government bonds is probably going to be the central bank balance sheet. And that could be done quickly. It could be done slowly. Beijing has a lot of choices in this regard. None of them are very good. Do you want to start small and then sort of expand this program over time so as not to frighten markets? Do you want to, start with individual provinces or cities or individual debt instruments? But when you do that, you hypothetically expose those others that are not directly guaranteed to market risk. Not an easy choice. Or do you want to try to break the implicit guarantees in local governments by allowing a few of these to default and then coming in with sort of a rescue package? These are uncharted waters, is all I would say. And the kind of measures you're hearing so far are very tiny incremental steps along those lines. I think we will see a plan emerge in the next 6 to 12 months, but I think it's far more likely to be a reactive incremental plan to address this rather than something more comprehensive and proactive.
I would just add on that, I think all of us are a little bit having deja vu because we've seen this happen before. So if you go back a decade, 2011, 2013, they're trying to get a handle on just the sheer amount of local government debt, setting out audit and inspection teams. 2023, that's happening yet again. The central government still doesn't know exactly how much local government debt is out there. And then one of the main changes being talked about is, local governments issuing more bonds, taking some of that off-balance sheet debt, making it explicit. That happened in 2015. And, in general, it's good to take, high interest rate, very short-term debt, transform it into something that's lower interest rate, more sustainable over the long run. But it doesn't solve the fundamental issue of, as long as these local governments continue to have this structural financial deficit, they're going to keep borrowing through these channels. So a little bit of blast from the past. We're seeing the old playbook, maybe even not as aggressively as it was pursued in 2015. The other thing that we're seeing is that the losses from some of these debts are really being hidden. And the way that's occurring is that, for example, with many of the off-balance sheet local government bank loans, banks are being told to extend that, extend the loan tenor 5, 10 years, 0 interest payments for 5 years, that sort of thing. That has the same effect of recognizing a debt. You're just doing it in a different way. And so I believe a lot of these losses will ultimately show up on the balance sheets of banks, the balance sheets of insurance companies and other investors in these bonds and other investors.
Thank you.
Commissioner Hellberg.
Thank you, and thank you to our witnesses for their testimony today. Having seemingly run out of dissidents and business leaders to disappear, it looks like the Chinese government has now graduated to disappearing its data. The Economist and the Guardian have described China's real estate market as a giant Ponzi scheme. The Washington Post also reported that a study of satellite imagery suggests that China may be inflating its GDP by up to 30% on any given year. If real estate activity makes up the lion's share of China's GDP growth, if China lies about its GDP numbers, if the Chinese government is juggling debt by using its right pocket to fill up its left pocket, If China is now hiding all of its underlying GDP data and investors aren't able to do any meaningful due diligence, can you explain to me how any investors can be confident that China's economy isn't a giant Ponzi scheme? And would any of you hypothetically invest your own family's retirement accounts in China?
Maybe I can start with that one. You know, I think we're very concerned about the trend and direction with Chinese data transparency. I've been following Chinese data for a long time, and I think, you know, earlier, a decade or so ago, it was actually getting better in terms of frequency and transparency for a lot of data releases. But particularly over the past 2 or 3 years, I think we've seen more and more data sets kind of not reflect what we're seeing in reality. And then also data sets that we've relied on no longer being published or being published very infrequently. So that's a major concern. I think, you know, that's macro data. For company data, which is what I primarily deal with, you know, we are always skeptical of every company's data. I think that's key to being an investor, is to approach a company's data with a skeptical mind. And so we try to rely on many different methods, you know, looking at audited financial results, you know, combing through financial models, talking to outside analysts, really making sure that a company's data can be triangulated in a variety of different fashions. But I think investors as a whole, if they can't get comfortable with either the macro data or the company level data coming out of China, will reduce their exposure to that market. And I think that's a
triangulate. How do you triangulate data about a company in China?
Yeah, so there's a variety of different methods. You know, that's talking to the company, looking at outside sources of data that might be able to be matched against the data the company itself is putting out, comparing that company not only to its domestic competitors, but what we see in international companies that are in a similar industry or a similar business model, and really trying to look at it from a variety of different ways and just see if it passes the smell test.
Next witness, please.
And just in response to that, I mean, I think one of the things that we try to do is to follow the money in China's financial system rather than the official data. So there's actually, you know, fairly reasonable data on China's credit expansion, the state of the banking system, and one of the reasons that we've done this for so long is precisely because that is a very robust sort of area of data that's available, while the headline economic data is less reliable, particularly in terms of GDP. It's just not realistic to assume that China's GDP was more stable than any other countries that we could find over the 2014 to 2019 period, where, you know, GDP growth barely moved at all, despite the fact that policy changes, both monetary and fiscal, adjusted quite a lot over that time frame that were more indicative of a regular economic cycle. Similarly, it's not really realistic to say that China's economy grew at all in 2022. It's far more likely that the economy contracted in 2022, given the impact of lockdowns and other restrictions on activity. Headline Chinese consumption growth was negative. Investment from the property sector has certainly contracted.
How do you follow the money in a system that basically treats as espionage and criminalizes doing basic due diligence on a company? And would any of you invest your own family's retirements in China at this point in 2023?
I think the point on that I would argue is that China faces this long-term problem in restoring investor confidence. The outflows from China's system are inevitable. The inflows are not. The inflows are highly contingent. The outflows are inevitable because China has this the world's largest money supply in dollar terms. The inflows depend upon all of those individual decisions that investors make, and investors have different priorities. And an absence of information can sometimes be a benefit to certain investors if they think that's an opportunity that they have information that others don't. And that is a different type of market environment. It's not the one where China has been trying to develop over the last 2 decades, but this is sort of where we are.
I would just add on that too. You know, I can only speak to my personal experience, but I've done 2 trips to the country this year. I've met with more than 24 Chinese companies, found them very willing to talk to me, open and transparent about the challenges they were facing. And to answer your question, Commissioner, I I do have my own personal funds invested in some Chinese investments.
And so, and you talk to Chinese business executives in China, and you don't think that Chinese business executives have a long history of misrepresenting their books and misrepresenting their information to American visitors? You don't find that there is a long 20-year track record of misrepresentations in their characterizations of their economy? You trust that we should invest billions of dollars of pension fund money in the Chinese market at this point?
Yeah, we invest in a lot of difficult markets around the world, and I would say we always approach every single investment with a skeptical eye, and we never invest unless we can get beyond some of those thresholds.
And you think we should be, from a U.S. government standpoint, the U.S. government should allow American pension funds to deploy billions of dollars of funds based on a smell test and verbal conversations with business executives in China, not based off of objective due diligence that every American company has to go through here in the United States that's based on disclosure, accounting rules, and so forth?
Yeah, I think the most important things from a U.S. Investor perspective, I think, is transparency and disclosure. I think. Do
we have transparency in China?
I think
Did they just outlaw that?
So I'm talking about the funds themselves. So I think it's very important for funds to be very clear about what their investment objective is, what exposure they will have, and most importantly, what are the risks that investors in a particular fund will face. And so that is a key component of investor education. And I think there's always a lot more we can do to make sure that American investors, when they invest in China or any other overseas market, really understand the risks associated with their investment.
Well, I don't want to take up more time, but my view based on this exchange is that it's high time to suspend the deployment of American pension funds in China, and typically American pension funds are not in the gambling business, they're in the wealth preservation business. Thank you.
And we will have a round 2 of time allots. Commissioner Price.
Hello, and thank you all for your testimony today. I found it very, very compelling. I want to pivot to some of your recommendations that you put in your written testimony. Some of them were very interesting, and I'd like to flesh them out a little bit more. So I have questions for each of you. I'll ask them all at top, and if we run out of time, we'll either go over or we'll come back to it afterwards, so thank you. So Dr. Wright, in your second and third recommendations, you talk about taking more active steps for financial support to emerging economies struggling to renegotiate debt. Can you talk about that a little bit more? And also trade policy that facilitates de-risking. You probably could do a whole another 20 minutes on that, but give me your top priorities for de-risking. Mr. Borst, you talk about giving investors clear rules. Can you just expand on that a little bit briefly? And Dr. Liu, you talk about a shared entity list, make recommendation around that. I'd like you to flesh that out a little bit more as well. So, Dr. Wright.
Certainly, thank you for the question. So I think that the point is that unless there is an alternative to Chinese lending and an additional source of finance, that it's going to put a lot of pressure on emerging economies. Beijing is still going to stay at the center of that diplomacy in terms of how to renegotiate the external loans that countries are struggling with at this point. What Congress can do, what other lenders can, in combination with the private sector, is provide a realistic alternative for alternative sources of financing, and that can help at least at the very to be an effective bargaining chip and force Beijing sort of back to the table in negotiations, even if it doesn't, even if it's not necessarily productive in the short term. The point being that all of these countries are going to continue to be dependent upon Beijing actually acting, renegotiating, and extending debt unless we can offer something else as a source of financing. And so we need to actively consider what that would be. and what that might do for a more positive and externally oriented aspect of U.S. financial diplomacy to the rest of the world and to the global South, where Beijing has been extending influence in recent years. So that's the argument within that recommendation. And similarly, when we're talking about de-risking from China's economy, we're talking about diversifying supply chains. We need to have a trade policy that is lowering trade barriers and facilitating the kind of public-private investment that is consistent with those markets where we're developing alternative manufacturing capacity, being able to access U.S. and allied markets more effectively. And that's the argument.
Thank you. Mr. Borst?
Sure. So just to add a little bit about the clear rules. So I think, U.S. policymakers have rightfully identified areas where there are key national security risks to providing Chinese companies with capital. And I think the vast majority of investors understand that, support it. But I think the key is setting out a framework that is transparent, predictable, gives U.S. investors plenty of time to understand the new rules, is very clear about how investors can comply with those new rules. And I think really importantly is having a review mechanism in some of these restrictions as they go into effect over the course of years. It's once a restriction goes into place, it can prove to be very difficult to unwind it. Even if the situation has changed, if it's creating unintended consequences. So I would really just advocate as policymakers rightfully target specific areas of the Chinese economy to prohibit investment, that they're also thinking about, what look-backs are we doing 1, 2, 3, 4 years out to make sure that these rules are really working the way we thought they would, that they're not having unintended consequences, and that is a clear framework for U.S. investors to comply with this and not inadvertently trip over some of these restrictions.
Thank you. Dr. Liu?
Thank you, Commissioner Price, for the question. The shared entity list that I proposed as a recommendation is really with regards to, in the broader context of a coordinated FDI screening, both inbound and outbound and offbound, both in the United States and with our European allies, because the European Union has implemented their own version of FDI screening, but they are not necessarily to the same expertise or the same extent as the United States. The whole idea is not to implement protectionist policies, but really to strengthen U.S. leadership in shaping the FDI investment environment in the world. And I think there are some ground rules should be adopted with regard to both a shared entity list in terms of companies or foreign investors that are not welcomed, and an exempted foreign entity list that are sort of, the so-called white list. These are okay. And the whole idea is to convey to our strategic rivals, such as China or other competitors, the idea is not to constrain China's growth, but really is to not put a boundary with regards to what are off the limit. Because right now, I think in the U.S.-China relationship, the point of contention is that America's idea or America's intention of not focusing on containing China, this message is not delivered to the Communist Party and Chinese leaders. Therefore, by having a white list and a restricted list perhaps would be a good way to communicate America's intention.
Thank you. Very helpful. Commissioner Schreiber.
Thank you. This has been a fascinating discussion, and that was actually an excellent segue to what I wanted to ask about, but thank you to all our witnesses. So focusing on what the U.S. policy toolkit is and what we might do in response to the trajectory of the economy. I mean, mostly we've talked about insulating ourselves from spillover and protecting ourselves. We've talked a little bit about how we can stabilize. But I want to ask a different question. This is our strategic adversary, our rival. What if we wanted to pile on? What if we wanted to make these problems worse? What if we wanted to put Xi Jinping under tremendous pressure? What if we wanted to divert their attention in ways that they never bother us on the outside again by having to focus, very intently on the economic problems and youth unemployment and the like. So even if you don't agree with it, and even if it's marginal, what are things we could do to kick them while they're down, if you will, put pressure on them given the experiences that they're having right now, the trajectory they're on?
I would argue against that sort of approach simply because Beijing's going to blame the United States for doing that anyway, as that occurs. Sorry, go ahead.
No, I said even if you don't agree with it, marginally, yeah.
Understood. I mean, I think that the challenges that course of action confronts are also about alignment with our allies and partners. And so any direct action we would take would be far more difficult to maintain the sort of agreement and transatlantic alignment toward policies and preventing backfilling among sort of controls on supply chains and changes in manufacturing policy that we would expect. I mean, I think that that's sort of the concern we would. That's sort of the concern we would have. I mean, in terms of hypotheticals about what could, hurt the Chinese economy in greater sense, it's very difficult for me to come up with anything externally that would do more than what has already taken place in China over the last 5 to 10 years. In other words, if you were going to think about how to sort of undermine the vitality of a robust private sector in China, you would do roughly what Beijing has done in trying to single out some of these firms for political targets in the last couple of years. So it's a hard question to answer just because, I mean, is anything that the United States thinks about likely to have anywhere close to the same effect as a signal from China's government itself in that context?
Yeah, just to add on that, I totally agree with that most of the problems China's facing now are self-created. So in that sense, they're their own worst enemy at this point. But, for the hypothetical, if we want to continue to increase economic pressure on China, I think, further decoupling will increase pressure on China. There's been more extreme measures that have been discussed in the policy world, and those could be put forward. Those will have a direct cost on U.S. companies and U.S. investors, but maybe, if you weigh the costs, it'll be more heavily on the Chinese side. But, just to echo some of the comments, I think that approach in the short run will increase pressure on China, but I think over the long run, it will actually be damaging to U.S. interests, because I continue to believe that a angry and isolated China is a greater danger to U.S. interests than one that is interconnected. And we've seen, the approach of sanction and isolate applied to many different countries, even smaller, more isolated countries that really hasn't paid real dividends. Chinese economy is too big, too interconnected, too dynamic to be isolated in that sense. And I think if we pull away the ladder and tell, policymakers in Beijing and Chinese businesses that there's no room for them in the international economy, I think we're going to see some behavior and reactions in China that are much worse than what we're dealing with right now.
Thank you for the question, Commissioner. And I would also wanted to echo my panelist. Key argument with regard to perhaps there is more harm, the harm to the United States in terms of further pressurizing China, especially right now when the economic growth slows down, is probably it hurts transatlantic partnership, as well as our trying to build strengthening our alliance with Japan and Korea. And on top of a lot of this supply chain pressure spillover effect, there is perhaps another underappreciated challenge that for the United States, if the Chinese economy continue to worsen, and that is immigration problem. Since the COVID pandemic, Chinese illegal immigrant came across the Mexican border actually have more than doubled. So from that perspective, I think the further pressurizing China probably would create more harm to the United States, both economic-wise and for us to dealing with our immigration problem. And in a hypothetical world, in terms of pressurizing China, perhaps trade is a very important aspect because the Chinese economy is still very much export-driven. But again, trade would be hurting American companies' interest as well.
Thank you. Just for the record, I think if we were on our back heels, I don't think the discussion in Zhongdonghai would be how can we help the United States. And I think we've got problems with fentanyl right now. We got all kinds of problems, and I see them pouring fuel on the fire at every opportunity they get. But thanks for the thoughtful answers.
Commissioner Wessel.
Thank you all to the witnesses, and Ms. Liu, I was hoping to be there today to have you sign the book, your recent book, appreciated it, and followed your work at CFR and elsewhere, so thank you. I'd like to go up for altitude, maybe literally as well. I think it was The Economist that had an article earlier this summer. I think the headline on the or the cover was "Peak China," and what I'm hearing from each of the witnesses today is, in some ways, that China has peaked, and I think that is underappreciates what China is doing. That it is de-risking. Whether it's through Belt and Road, whether it's through other industrial policies, whether it's through outbound investment approaches with Indonesia and nickel supply chains, or many other things. And I think what all of this, what I've heard today, is potentially following some of the flaws in our earlier approach, earlier analysis of China. First, that reform would come from economic engagement. As you said, Mr. Boris, we've been through this somewhat before in the 2010s or so, and we're, following the debt issues. We continue to evaluate China's approaches through a Western lens rather than through the CCP's lens. And I think that leads to fundamental flaws in terms of how policymakers are being told to respond to China. And what I hear is de-escalation. What I hear is de-risking. What I hear is don't push too hard, too fast. Rather than what are Western interests, first the U.S., how should we pursue them and worry a little less about how the CCP is going to, how the CCP leadership is going to respond. So, and first, the question of has China peaked? Is that relevant? Is there a different trajectory they're on, and we don't appreciate it? And is the current reset in U.S. policy with a limited outbound investment executive order, slowdown of congressional action on China, a sign that, potentially we're reaching a new stasis? Mr. Boris, you want to start?
Sure. Yeah, it's a great question. I saw The Economist cover too. It was very provocative. I guess I don't quite know what they mean by peak. I and others have argued that the growth miracle in China is over. We're not going back to 8 or 9 or 10% growth. And so from that perspective, we have entered a new era. But China is still going to be around. I don't think the Chinese economy is collapsing. I think there's many scenarios where the Chinese economy could grow slower, but still healthily at a 3, 4, 5% level for the next decade or more. So China will continue to be an important global economy. It will continue to be a major source of global economic growth. I think the IMF is projecting that even with the slowdown in growth, China is still going to be about a third of total global growth. And the U.S. will continue to have significant business interests in China. And I think now, as I say in my written testimony, is a really opportune moment where tables have turned a little bit. The U.S. economy is doing quite well. Chinese economy is kind of on their back foot. These have been the periods in Chinese history when they're actually most open to economic reform. China doesn't reform just to reform. It doesn't do it out of the good nature of its heart. It does it because it knows it needs to continue economic growth and how important economic growth is for the country. So I think this is a good moment. If we understand that China's not going anywhere, they're not going to disappear. I don't think the Soviet Union, outcome is likely. How do we continue to live with the Chinese, and how do we proactively advocate for U.S. interests as it comes to the U.S.-China economic relationship? That's what I think I would hope that policymakers would really be focused on right now.
Mr. Wright?
Yeah, I would agree with much of what Nick just said as well. And I think this is an opportunity. It's not that the peak in China, so to speak, is it probably true in a broader economic growth or economic trajectory sense, but that still doesn't mean that the challenges that we're facing from China in many senses have peaked, whether we think, and instead, I would argue that this is an opportunity to refocus U.S. efforts, not on what the interaction between China's growth and inevitable rise, quote unquote, will do to those challenges, but instead focus on these individually, focus on them far more narrowly. When we're dealing with military and security challenges in Taiwan and the South China Sea, when we're dealing with spread of advanced technologies and competition in advanced industries, and in China's politicized influence over some of the next generation industries we're dealing with, and that's the only thing I'd add.
And thank you, Mr. Vissel, for your question. With regard to the question about peak China, I would say I agree with my panelists, Nick and Logan. And in particular, I would wanted to emphasize that actually China is still very much a leader in renewable technologies, in the transition towards a cleaner energy future. And China is still very much dominating the supply chains of critical minerals that are necessary for the world to transition to a renewable future. So from that perspective, I think, yes, if we measure the Chinese GDP growth or measure export as a percentage of GDP, China's economic growth model or the old playbook perhaps has reached running out of pages, perhaps. But depending upon how the government reform goes forward, and in particular the politics of that, there is a chance that China can sustain, but given the current political environment, is not clear. And with regard to de-escalating or the tension, I very much appreciate that question, and I think perhaps both countries or policymakers in both countries can borrow from a page book by Otto von Bismarck. I remember he once said, I forgot which year, but he once said, diplomacy is about the art of building ladders to let people climb down. And in Chinese, I think it basically means to 给台阶下, let somebody gracefully climb down. And I think perhaps right now, American leaders should lead the moral high ground to give President Xi Jinping and Chinese leaders an opportunity to gracefully climb down.
Thank you.
Thank you.
I'd like to recognize Vice Chairman Wang.
Well, since Bismarck was invoked, he also said war is diplomacy or the continuation of policy by other means. I don't know how that fits with the latter, but anyway. Dr. Wright, I want to focus in on some of your recommendations. You recommend what you term alternative channels of financial support for developing economies that are struggling to renegotiate debt with China. What do you mean by that specifically, if it doesn't mean the kind of current multilateral lending institution or multilateral development bank lending that we do with our allies?
That would likely be a component of it, I would say, Commissioner, but the you would probably need some additional policy support for private sector to invigorate private sector support for that as well. The point is you need an alternative if Beijing is not going to provide meaningful debt relief and the negotiations are sort of starting to bog down in that respect, and countries are struggling with significant financial stress, then they're going to need some sort of additional marginal source of new financing. And ultimately, this means the rest of, we will need to provide some sort of alternative for that, which has the added benefit of, if you will, removing Beijing from the center of that aspect of economic diplomacy with some of their primary allies in those countries aligned with them because of Belt and Road related lending.
So would that in effect be the U.S. and our allies helping to refinance debt to China? I mean, effectively?
The whole argument would be that if China is not going to provide meaningful relief, that you need to provide countries with an alternative of saying you can walk away from your debts to China, and we will still provide, and that will not impact your broader credit status and your creditworthiness in global markets. That's kind of what we need to offer, renegotiating with everyone else.
Okay. And the strategic impetus behind that, is that for us to blunt Chinese influence? Is that humanitarian? Is that to maintain global financial stability, or is it all three?
It can definitely be all three. I mean, I think you can argue this is very self-interested from the United States perspective, that it fulfills this strategic objective because many emerging economies are going to be struggling to maintain basic services. There's various measures of just how distressed given the rise in U.S. dollar financing costs, the rise in debt in recent years. There's going to be significant pressure in emerging economies unless someone provides that form of debt relief. So you can argue it's explicitly self-interested in that respect that we maintain global financial stability through those channels. But it also has the added benefit of expanding the U.S. channels of influence with countries with whom China has engaged most directly in recent years.
Alex, can I clarify something?
Sure.
In that context, are you suggesting that China's, the underlying asset or the project, they're severed from? So international donors step in to try to offer the relief that some country needs. What's the ongoing relationship with China, and how do you avoid free riding?
Yeah, I'm not sure exactly how that will work out. I'm not sure exactly how that will work out. I mean, that is going to be a problem. The point is, without an alternative, these countries are still going to be within Beijing's orbit and engaged in this very slow process where Beijing's not providing this. But in terms of the actual mechanics of how debt renegotiation will work, I can imagine some scenarios in which they would be walking away from those projects. I can imagine some scenarios in which you would find alternative financing channels for them.
Okay, I think I'll send some follow-up written questions on that, because I think it's a nuanced and detailed topic. But I also want to talk a little bit about your phrase in one of your other recommendations about next-generation trade and investment policies to aid in de-risking and supply chain diversification. Now, you touched on this in another question and answer session with Commissioner Price, but I just want to ask, at the risk of being somewhat sensitive here, I mean, this term next generation I know is stylish, but are we really just talking about old generation kind of investment treaties and trade agreements, whether it's sectoral or broadly based?
Absolutely. I'm not trying to imply that there's anything really innovative or different about this. I think what we need to do is, if we are ensuring, I mean, in order to sort of reinvigorate the trade policy agenda to try to reduce barriers over time, if you are going to be trying to provide or offer alternative sources of manufacturing supply chains from locations in China, you're going to need to be reducing trade barriers so that countries can be encouraging investment at lower cost, and the byproducts of that investment can also be traded more regularly. So yeah, it is a basic call for reinvigorating U.S. trade policy in Asia in particular, and more broadly. But that is the argument, is that if you're thinking about de-risking or decoupling kind of risks, you need to be thinking about the next step of this as well. That's what I was trying to say in the recommendation.
Our second panel will examine evolving trade and supply chain challenges in the U.S.-China relationship. We'll start with Dr. Christopher Gopal, who is a former executive, a global supply chain consultant, and the author of the recent book, Breakthrough Supply Chains: How Companies and Nations Can Thrive in an Uncertain World. He will provide an overview of the evolving supply chain landscape. Then we'll hear from Dr. Ilaria Mazzucco, a senior fellow with the trustee chair in Chinese Business and Economics and the Center for Strategic and International Studies. She will address the rapid rise of China's EV exports and the role of China's green industrial policies in its trade and supply chains. We very much appreciate both of your testimony and would like to remind to keep your remarks 7 minutes so that there is ample time for questions. Dr. Gobel, there you are virtually. Why don't we begin with you?
Thank you, ma'am. And first, members of the Commission, I'd like to thank you for the opportunity. Can you hear me?
Yes.
Oh, good. I'd like to...
No, we can't. Count backwards. Okay. Something's happening with our sound, with our witness. Do you suppose that we could correct that? Because I know I can't. Why don't we move to Ms. Mazzucco? Could you pick up while we're trying to sort out whatever pixie dust needs to fix that? Thank you.
Thank you, members of the Commission and staff members of the Commission, for the opportunity to be here today. I've been asked to discuss the electric vehicle sector in China and implications for the United States. Let me start by saying that, like with other clean energy technologies, such as solar panels, China's growing importance in the EV supply chain hinges on its cost advantage. Vehicles made in China are affordable and of increasing quality.
I can hear you, and I'm hearing several people.
Mr. Gopal, we've asked your colleague to go ahead and speak because we couldn't hear you. So we're trying to correct your technical difficulties. Can you hear her speak?
I can hear you. I can hear Ilaria, yes.
All right. Well, if you'll wait until she's finished testifying, then we'll turn to your testimony.
Absolutely.
Thank you. Shoot.
Great. So vehicles made in China are affordable and of increasing quality, making them attractive to consumers worldwide. The cost of these vehicles could also undermine the supply chain and diversification efforts underway in the United States, although they could also help advance electric vehicle, adoption worldwide. As a consequence, policies should take into consideration the trade-offs as well as cost and competitiveness. I will now discuss briefly the state of the industry in China and how competition and large manufacturing capacity there, combined with increasing international demand, are driving a surge in exports, then discuss what the patterns in exports looks like, and finally, how growing exports are setting the scene for an expansion in international manufacturing on the part of Chinese companies. I will then offer some recommendations. The EV industry is considered today one of the most successful instances of industrial policy in China in recent years. Indeed, as a result of converging industrial policy, government interventions, including subsidies, market and technological trends, most EVs today are bought and made in China. As is typical of industrial policy in China, after a wave of overinvestment, we may be headed towards overcapacity, and intense competition is certainly underway. A very large number of companies entered the market attracted by subsidies, but they are now navigating the most competitive EV market in the world, driving down prices. Consolidation of the industry may be complicated by the web of relationships between companies and local governments, something that has characterized the traditional automotive sector in China as well. Local governments have provided various types of support, including tax breaks and preferential procurement contracts, but they're also quite literally invested in the success of companies. Importantly, several investment funds owned by local governments are investors in EV companies. This is an example of below-market equity, but access to below-market credit is also widespread and an industrial policy tool in China that EV companies have benefited from. Some non-Chinese companies have also benefited from government support at times, especially from local governments. This competition is driving down costs and putting pressure on companies to find new markets. As a result, EV exports from China are growing fast. They doubled in dollar terms from 2021 to 2022, and based on data from 2023, it looks like they're probably on track to double again. Europe and Asia are the main destinations of these exports. Foreign companies are certainly part of this trend. In the first half of 2023, Tesla accounted for almost 40% of exports from China, and joint ventures between Chinese and European companies accounted for another 9.5%. So that adds up to almost half of the exports. This points to two concurrent trends. China is becoming a manufacturing export hub for multinational companies, and Chinese-owned firms are becoming increasingly competitive and exporting more to new markets. As these Chinese firms expand their market presence outside of China, they have an increased incentive to localize production. By making vehicles and batteries locally, companies can avoid tariffs and high transportation costs, benefit from host government incentives, and mitigate political backlash. There are multiple planned factories of this kind and a few that are already existing. Thailand is by far the greatest recipient of these investments. Host governments are not passive players. In many cases, they're actively trying to attract investment. This is the case both in Thailand and Brazil, for example. Even in Europe, where imports from China are contentious, FDI is far less so. So far, most investments in Europe and North America are in the battery segment, not vehicle construction. But it is not immediately clear whether Chinese firms will be able to maintain these very low costs and prices when they are operating abroad, especially in regions like Europe with high energy and labor costs. So this all adds up to a complicated picture because growing exports from China create a dilemma for policymakers. On the one hand, Chinese supply chains can help reduce costs. On the other, automotive manufacturing continues to be an important sector for many advanced economies, including the United States. And if production were to relocate to China, this could undermine domestic job creation and potentially lead to deindustrialization. It would also undermine de-risking efforts. So what can be done? I would strongly recommend against trying to slow down the transition to electric vehicles in the United States. Quite honestly, the United States tried this, and it didn't really work. It would also be counterproductive because the transition is well underway globally, and the United States would become even more of a laggard if it tried to reverse this domestically. Instead, policymakers should continue to provide more incentives to advance a diversified and competitive industry and promote innovation, in line with the Inflation Reduction Act. This will require a realistic assessment of supply chains, as well as the trade-offs attached to trade policies. To this end, I recommend that policymakers, 1, identify under what conditions Chinese companies can and cannot play a role in American EV supply chains. To make this judgment, policymakers will need access to better data on supply chains and costs and require more transparency from companies, consistent with recommendations that this Commission has made last year. 2, trade tools can be powerful instruments in achieving de-risking, and policymakers should explore their use, but they should also evaluate their impact on costs very carefully, as they could undermine the industry more broadly. 3, this is not a uniquely American challenge, and there are certainly opportunities to further coordination and cooperation with other countries that are grappling with China's rise in this sector and what this means for their economy. I will stop here and look forward to your questions. Thank you.
Thank you. Mr. Gopal, can you hear us? Are you prepared to testify? Please proceed. Jameson? Mr. Gopal, we could hear you a few moments ago. For some reason, we're not able to hear you right now.
Can you hear me now?
Yes.
Thank you. I hear somebody else talking.
Oh, you probably hear the congressional studio. Could we turn those off, please, so that he is not distracted by that chatter?
So
why don't you proceed?
Oh, good. Can you hear me now?
Yes.
Okay, great. I heard about 3 different people talking at the same time, and one of them wasn't me. Well, let me start off again. I want to thank all the members of the Commission for the opportunity to testify on this. I think it's one of the most important topics and one that impacts pretty much every citizen in the country. So I shall talk based on a supply chain perspective. And that is not a macroeconomic perspective, but I can hear everybody.
Could you describe what it is that you're hearing so maybe we can clear it out? What is the problem?
Should I? Okay. Again, for today, I'd like to lay out.
Dr. Gopal, close your other internet browser window that has the live stream going.
Okay, now can you hear me?
Yes.
Terrific. Let me start off again. Thank you, everybody, for this opportunity. And please let me know if you can't hear me at any point. So I think I'll talk from a supply chain perspective, from a ground level, from an executive level. And Chairperson Glass accurately summarized the situation very well in her opening statement. We've come to the realization over the past few years that driven by pandemic, global conflicts, and events, our critical global supply chains from the point of first supply to the end consumer and back, what we call dust to dust, are highly vulnerable and dependent on China. This is the result of what somebody called willful blindness on our part to the US-China relationship. And let me describe some of that from a supply chain perspective. First, I've heard the term critical supply chains quite a bit. Critical supply chains are all the products, capabilities, technologies, and investments that impact all areas of our national security, defense, health, and well-being. Everything from PPE and antibiotics to defense, to hypersonics, to electric vehicles, and artificial intelligence. And disruption in any one of these can have cascading effects throughout the supply chain and pretty much bring our economy to a halt. So the situation has been driven by several different issues. A lot of them, we talk about the China issue, but a lot of them have been our own doing. For instance, our trade philosophies and globalization assumptions, where we assume the movement of goods, money, people, technology would flow across countries with no government intervention very smoothly, where competition would fuel growth with small businesses, lower our overall total costs, and generate innovation. In other words, the level playing field. What we found is that hasn't happened. The aggressive national supply chain policies and objectives of China, and there are several: market incentives, financial incentives, low cost and stable labor, promise access to the markets in order to become the manufacturing center of the world. We see that very clearly. The coercion of companies to adhere to political and social standards, the acquisition of technology and intellectual property by almost any means available, location in third-party countries to sidestep US and other government policies, and a strong, and this was discussed by the earlier panel, investment and initiative in other countries to corral the supply of essential elements and minerals, which drive our supply chains. And finally, the most obvious one, dumping at low cost. And I think we can agree that these have been pretty successful from a supply chain perspective. And then something of our own doing in this situation, which we call the financialization of the supply chain. Topic and concept highlighted by Rana Forohar in her book, Makers and Takers, some time ago. Basically, decisions made by individual executives and boards to drive costs down, reduce assets, offshore capabilities, to basically address the benefits to shareholders, not other stakeholders or national security or communities. And it's driven by what we used to call short-termism Wall Street demands, as well as executive compensation based on share price. And finally, the concentration of various industries and domination of distribution channels, mainly because of our laxity in enforcing our own rules and regulations. The combination of all of these external and internal forces has been to develop fragile supply chains globally. In other words, supply chains that are built to break under stress. And the stress includes everything that comes at us from the outside. And the characteristics of these supply chains are dangerous choke points in China and other places, which could disrupt our industry, loss of our intellectual property and technology, the loss of our own education system, manufacturing, supply chain, technology, in education, our whole communities, and let's not forget the vulnerability to our national security. But this has not been a surprise. Okay. The dangers and risks have been brought together by this particular commission in 2002 and by forward thinkers such as Barry Lynn in his book, The End of the Line. Let me read one particular extract from the 2002 report. U.S. policy towards China has been driven by narrow commercial interests, specific human rights issues, or particular military and security issues. The increasing transfer of U.S. research and manufacturing facilities to China could have a negative impact on the strength of our technological and industrial base, as well as our relative military strengths. Nobody could have said it better, and this was said 20 years ago. So, hence the term willful blindness. So what can we do to help our supply chain? There are several things that we can do, and I've laid them out in the written testimony, but a brief summary. First, it's a tug of war between national security, between individual wealth and company wealth, and we have to get around that. But essentially, I would suggest we must continue the funding of our U.S. manufacturing and infrastructure. Great start, a lot more has to be done, and it has to be expanded. Critical supply chains are not just semiconductors and not just artificial intelligence. They're everything. We need to help small businesses with financing and help them with innovation. We need to know what we're dealing with, so we need to map our critical supply chains end to end. Very importantly, we need to mandate sourcing parameters and foreign ownership parameters so that we can look at our critical industries not being tied to one country, but maybe reshoring, nearshoring, ally shoring, anything other than stuck in one country with one source. We need to preserve and protect our research and technology through what the Biden administration has done recently. And we need to do a lot more of that, including restricting access to our technologies, as well as restricting foreign enrollment in our prime technology at our universities. And finally, I have to add this, we have to emphasize and fund STEM and our vocational schools. And with that, I'll stop, and thank you very much for the opportunity.
Thank you, Dr. Gopal. I think, Carolyn, are you there? No. So we'll begin with Commissioner Borokoff.
Thank you both very much for your very interesting takes. From my viewpoint, Dr. Mazzacco, you were very specific talking about EVs, and Dr. Gopal, a much more general look at what's happening and what needs to happen. So it's hard because I can't ask a question, or I'm not capable of asking a question that applies to both of you after listening. So Dr. Mazzacco, I know that a huge percentage of the EV battery market is 80% controlled by China. Lithium batteries are just their purview at the moment. And yet it's clear that America, if it chose to, could get involved in that in some fashion. And we have immense resources to be able to do that both here and near here. Our EV vehicles are selling extremely well domestically that are made here. And you pointed out not well at all in Europe or China. Given the fact that the batteries are such an integral part of this, is there even a way for us to grow our market? I'm concerned about the domestic sales of EVs. I mean, Ford has a waiting list for their trucks. Their vehicles are in great demand, but they aren't making the batteries. So my question is that a lost cause, or is it something that, in your opinion, can be corrected?
So actually, as a result of the Inflation Reduction Act, there's been a surge in investment in battery supply chains in the United States. I would say what is something to keep an eye on is that a lot of it has to do with the assembly of the battery, so the battery pack, as opposed to the components that go into that battery, right? So the cathodes is really where a lot of, I think 80% according to DOE are made in China. Now, in terms of whether it's a lost cause, I think actually the question is not so much whether they can be made here. I think they can. There are some concerns about cost. I think that's a big one. Environmental costs as well, right? It can be very polluting to refine some of these materials. That's why they got offshored in the first place. But it's also which companies are going to be doing that, right? So I think that's a big concern here, and that's part of my recommendation, is that we need to actually have a better conversation about whether or not to allow or embrace of FDI from China, because it's already happening, right? We already have the Ford CATL deal. We have the Gotion factory in Michigan. And that's because there are no real American companies that are making these batteries at a large scale. We do have, the Inflation Reduction Act facilitated encourage investment from other companies, from Korea or Japan. But because Chinese companies are just so advanced in these batteries, in some cases there's some technology that other companies don't have. Now, I don't doubt, in fact, I'm certain that that a lot of American companies and scientists have the technology to even produce more advanced batteries, but the problem is creating them at scale and at cost. And Chinese companies have just had a lot of advantage. They've had a decade of experience in making these, in part because that's where the market was until recently. They've been selling electric vehicles over a much longer time. So I think it just requires time, and I think it's going to be very difficult to do without foreign investment. And I think, frankly, it's going to be very difficult to do without any involvement on the part of Chinese companies. And now that might be involvement on U.S. soil, and maybe, in countries with which the U.S. has a FTA, and in terms of refining or extracting minerals. So I think, I think it will be important to maintain that de-risking mentality and encourage more investment in the U.S. or in partner countries. But I think we need probably to have a more realistic assessment of where Chinese companies may be entering and where that is more of a risk or not. Because I think in some cases it may not be as risky as in other situations.
Thank you for that. I would point out that a man from America who just passed away, Dr. Goodenough, who won the Nobel Prize, invented all of those, and recently has invented, just before he passed away, batteries that he thinks will last effectively for decades. And we gave that away to a foreign country because we wanted to save money on construction and manufacturing. So it's unfortunate we did it that way. And we have about 20 seconds left. Dr. Gopal, if you can pop in and pop out, if you're interested.
I certainly am, sir. Thank you. I agree with everything my colleague said. But looking at it from a supply chain perspective, which is the perspective I always look at things from, the upstream end of the supply chain is at risk. In other words, lithium, cobalt, nickel, all of those minerals are things we don't control right now. I'm not saying that we couldn't have them here, but that will require not only investment, but a lot of political will about mining and so on. But right now, we are busy building the front end and the downstream of electric vehicles. And it's the upstream that's really the concerning part of it, because we don't own that. A lot of that is controlled by China and Chinese companies, and it's something we're going to have to work around and discuss.
Thank you very much.
Thank you, Commissioner Borokoff. I'm next. So I'm interested, Ms. Mazzocco. You talk at length about the approach to evaluating supply chains must be broadened to include the supply chains, products, capabilities, materials, and technologies that impact health, PPEs, antibiotics, active pharmaceutical ingredients, food, renewable energy products, aircraft and automobiles, amongst others. Is it really possible for us to determine a definitive list of what comprises critical items for our supply chain? Or is this a fool's errand?
I believe that wasn't my statement, but I can comment on it. Yes, I do think it's challenging to identify what is critical. I actually think it is important to identify what is critical because otherwise everything becomes critical. And so I would actually encourage to have a very narrow view on what is actually, for example, a national security threat as opposed to just something that may threaten certain elements of the economy, right? And I think, you know, for example, when it comes to the electric vehicle industry and batteries, this is very important from an economic standpoint. I think it has very big implications for the political economy. I think national security-wise, the implications are far less concerning. And so I think, for example, here, that doesn't mean that one shouldn't take action, but one can take action in different ways, right? And so the types of risks that are involved are different. And so that's part of my recommendation is to take a very clear stance in identifying what exactly the objectives are and how to act upon them. So for example, cooperation with partner countries can be far more effective, I think, when it's not a national security concern. And I think there may be certain flexibility when it comes to allowing certain types of companies perhaps being involved in certain levels and certain elements of the supply chain.
Thank you. Dr. Gopal?
Yes.
Is it possible to establish a definitive list of what is or is not critical?
I believe it is. But let me back off a minute, because that was my statement you read. And what I meant, we have to look at criticality, the things that will seriously hurt us if they're disrupted, along a number of fronts. This does not mean the things that will seriously hurt a few companies, a few investors, things like that, but seriously hurt the country. And the second part of that is, what are the risk profiles of these things? So a critical supply chain may not be something we want to focus on if we can recover from disruption really quickly with our allies. A critical supply chain is something we have to focus on if it will take a lot of time and money and effort to recover while the economy is being hurt. And there are several of those. It's not an inexhaustible list. It's a fairly short list, but it has to be looked at both from the point of criticality and risk.
Is there any evidence that in these items that you have identified, at least as a preliminary list, is there any evidence that the United States is taking action to stockpile either critical materials or items that you view as national security risks?
I believe in the defense arena, yes. But otherwise, I don't see much of that from the point of view of private supply chain companies or even the government. And I'm hoping we don't actually stockpile them, but we build the capability to manufacture and get them out, which is the better way of doing it.
Well, like the strategic oil stockpile, I'm not sure I agree with you, but I also don't think that we should stockpile everything. But if we do believe something is, as you characterize it, both at risk and necessary, it would be interesting to see if there was any effort to map to stockpiles. Commissioner Friedberg, are you there?
Thank you very much. I had a question. I'd like to pose one question for each of our witnesses. Dr. Mazzocco, you started off by making the point that this forthcoming flood, you didn't use that term, but of low-cost Chinese electric vehicles could undermine the efforts of the United States and others to build up their own sources of production and supply for the components of these vehicles and for the vehicles themselves. So my question to you is, will it be possible, in fact, for other countries to catch up with China, to build up their own industries, the EVs, the batteries, and so on, without imposing some kinds of restrictions on imports of these products from China, and what are the implications of that if it's true? Dr. Gopal, you used the very interesting term of supply chain war, which I think is a good way of describing what's going on. And in a war, of course, you have two sides, and each is pursuing its own interests and objectives and has its own strategy. And China seems to have a pretty clear strategy of trying to reduce its dependence basically on the West for various things while doing things to maintain our dependence on them. And so my question for you is, what are the implications for U.S. and sort of wider allied strategy of the strategy that China is pursuing, essentially to try to prevent us from reducing our vulnerability and dependence? Because it appears now as if we don't really have much of a strategy. We have private sector actions, government action in a few narrow cases, but no overarching strategy. So, Dr. Mazzocco, first to you.
Yes, thank you. That's a very good question. I would say currently most countries do have some level of protection when it comes to the automotive sector, right? We have 27.5% tariffs right now in this country on Chinese imports. In Europe, it's much lower, and that's why we're seeing more imports from China. I think it's around 10%. So these already exist. So I think it's more of a question of whether they should be increased or changed. I think in reality, what needs to happen is some sort of balancing as towards the trade side of things and also the attracting FDI level of types of policies, right? So on the one hand, there needs to be far more investment domestically to build up manufacturing, and on the other, there needs to be a maintaining of certain level of tariffs, right? I'm not necessarily suggesting, I'm actually not suggesting to increase tariffs, but I think reducing them would probably not be ideal. I do think there is a risk of overcapacity in certain countries. I think that's basically where we're headed towards in China. I think that's part of the issue, is that we're going to see more exports because of that. There is a question, though, whether these companies can keep it up, right? I think in some cases, many Chinese companies are actually operating at loss. So that's something to keep into consideration.
Thank you. Dr. Gopal.
Thank you, sir. So what I'm about to say probably makes me unpopular with a lot of my colleagues, and that's okay. Yes, I don't believe we have a national trade strategy, and I believe we should. It should be based around economic well-being, our long-term sustainability, and our national security. We don't have all of that. Everything is in bits and pieces, and a lot of our national trade strategy is subject to individuals and individual companies, individual industries. So, for instance, we talk about auto tariffs and we talk about some restrictions on technology, yet our major companies are giving away our IP to China, building factories in China, working with the Chinese to circumvent any restrictions, and we don't have any policy as to what defines sourcing, ally sourcing, friend sourcing, reshoring, any of these things. So, sir, I do believe we need to have a national trade policy that addresses all of these and that addresses it from a national, not an individual or industry point of view. And I hope that answers your question.
Okay, thank you very much.
Thank you, sir.
Many thanks to both of our witnesses for coming before us today. You know, I have a few questions that sort of dovetails from panel number one. So what we know is there's fragility in the Chinese economy that has created a lack of consumer confidence to the same extent it used to exist in China, lack of consumer spending. We've got party official who is trying to stabilize and paint a different picture on the world stage, masking what is really essentially a recession happening in China and its implications to the world. So I'm trying to think about supply chains in that regard. Lack of consumer spending, looking at export markets, secondary markets to the U.S. economy, investing in other markets to gain access to the U.S. economy as a workaround to the current trade rules that exist, including the Section 301 tariffs. And I lose sleep at night in terms of what are the implications to U.S. manufacturers and service providers, because the Chinese government, its party, its officials are doing everything they can to help prop up industries right now. And to what extent, I know we've talked about EVs quite a bit during this session, and we have an EV expert here, but what are the implications longer term, and do we have enough trade tools in our toolkit to address what could be a very severe economic harm both to the United States economy and to our allies? And that's my read on the situation. So please disagree if you have a different perspective.
I'd like to just jump into that quickly then. And yes, I completely agree with you. From a supply chain perspective, what we are looking at across the ocean is not what economists look at. We're looking at an economy in China that's going down slightly, consumer spending is down, but the capacity is still there. So what have countries traditionally done with that capacity? So we're looking at dumping. We're looking at dumping low cost, lower than cost items in our markets, either directly or through subsidiaries located in Mexico or in other places, or through other companies that are controlled. But we're looking at that sort of thing. And the only way I think, well, that's one of the major issues. The way we can handle that is through our restrictive laws as we have it about dumping and things like that. But that is a serious, serious concern. Meanwhile, there's going to be no let-up in the Chinese attempting to take our technology because of their development of defense systems and their own military capabilities. So they will buy stuff. So I see no let-up in the degree of competition in the supply chain world with those developments in China. Over.
Yes. Right. This is clearly something that's very concerning that the U.S. should be keeping an eye on. I spend a lot of time thinking about clean energy supply chains, and there the dilemma is particularly acute, I think, because on the one hand, this is an industry that the U.S. does not have a handle on, right? This is an industry that we're trying to develop currently in the United States, and similar efforts are underway in other countries, like in the European Union, for example. And even in some developing countries like India, for example, right? They're trying to develop their own clean energy supply chains. But at the same time, costs are continuing to fall in China, and so we continue to see exports. That's not a bad thing in terms of consumers globally, right? There's access to these technologies, but it's not good from a perspective of our domestic economy and de-risking, which are all pretty important targets. So it creates this big policy dilemma that I've been talking about. I don't think there is an immediate panacea. I don't think there's one trade tool that we can point to that can solve everything. I do think there needs to be far more thinking about this and needs to happen fairly quickly. At the moment, there are none of these, the flood of Chinese EVs has not happened in the U.S., but, the cost is so low that eventually a 27.5% tariff may not be that big of an obstacle. That may not be, this might take some time. It may take very little time. We don't know. But I think there needs to be a lot more creative thinking about different types of tools that can be utilized. I do worry that cost is going to be a very big concern, because that's typically what trade tariffs do, right? They raise costs. And once these products are not competitive, there are alternatives to these, which are fossil fuels or traditional automotives, the traditional automotive industry, which then undermines the broader transition, which makes the U.S. less competitive and less innovative, right? So I think there is a bit of a, there's a lot of juggling that needs to happen in this.
Thank you.
If I can just say a couple of sentences on that. I agree with everything Ilaria said. That's terrific. I'd like to point out another implication of this. Reduction in costs in other countries leads to our own costs being, quote, uncompetitive, which in the past, because our executives are compensated on share price, and we have some short-termism in what we get from Wall Street, will lead to increased outsourcing and offshoring of critical things, which in the past has led to hollowed out communities and everything else that we talk about. So this is an issue that we need to look at from a nuanced and multifunctional perspective, not just the economics of it. Over.
Thank you.
Commissioner Goodwin.
Thank you, Madam Chair. Dr. Mazzocco, in your testimony, you indicate that attempts to completely insulate us from competition is not the right approach, and instead continuing to pursue incentives to advance our domestic manufacturing capacity and encourage investment in EV supply chains like the IRA is the right approach. And you recommend then what we need to do is identify under what conditions Chinese companies can play a role in our EV supply chain. And I wonder whether the IRA and some of the specific investments you referenced in your testimony raise a separate question, which is under what conditions should Chinese companies be allowed to directly benefit from the financial incentives and consumer subsidies in place to encourage EV production here in the United States?
So your question, excuse me, the question is under what conditions they should be able to benefit from the incentives?
Yes, and do you see that as different from the way you framed it, which is whether, under what conditions should they be able to participate in supply chain? And, the difference is step back and consider under what conditions should they be able to actually access the financial incentives and benefits that we put in place to encourage investment in EV vehicles here in the United States?
Yes, so I think my recommendation stemmed from the fact that there has been a lot of unclarity and a lot of confusion over whether these companies should qualify from subsidies in the United States, for example, and also from the fact that there has been increasing investments on the part of Chinese companies upstream in countries that then would qualify under FTAs for supplying critical minerals for the production of batteries that then would qualify for subsidies, right? So I think the question is not my question, I guess, or the question I raised is not so much that I don't necessarily have the exact conditions at hand, because I think they really depend on the segment of the industry, on the industry itself, and then on the companies themselves as well. But I do think it's worth raising the issue that we don't necessarily, it doesn't seem to me like we have a very clear framework of how to deal with Chinese companies as they internationalize. So that's what I was pointing to in my recommendation. I don't necessarily, I mean, I think if if the two companies that we're talking about qualify, if they are meeting the legal requirements to be in the United States, then there's not much, I can say or do to say that they shouldn't be here, right? And neither can anyone else. But I think if policymakers think it is risky based on data, then they should certainly amend the legislation. I haven't seen anything that suggests to me that these companies are a risk to the United States. I think they're helping expand capacity, but I may be wrong, right? I may not have access to all the documents, and I think that's part of the issue here is exactly what types of investments we're talking about. I do think, though, that it's going to be unavoidable that we're going to keep seeing these questions coming up, and I think we need to just have a very clear framework. I think this is also going to be very helpful for American companies as they engage with Chinese companies to know what they can and cannot do. So I think there should be more of a clear framework on this sense. I hope that answers the question.
Sure, thank you. Dr. Gopal, do you have any thoughts on that question?
Yes, it's the same thoughts that I had on the previous one, sir. And that is, we have to decide when we look at investments and things like that, what our key priority is. Is it national security? Is it our own jobs and economy? Or is it the proliferation of one particular industry? And with that in view, I think, as Ilaria pointed out, we have no specific framework with which to analyze Chinese companies working here. But we never need to forget that the long view that the Chinese government takes is not necessarily how do we get the best EVs or green technology in the US. It's how they can profit by this over the longer term. And given that, I would say there's a lot of issues in allowing Chinese companies at this stage to be part of the spending, that infrastructure spending that we are talking about right now. I think we have to look at that very carefully. Over.
Thank you.
Thank you. Are you finished, Commissioner Goodwin?
Yes, thank you.
Thank you. Is Commissioner Hellberg there?
Yes. Thank you to all the witnesses for insightful testimonies. I wholeheartedly agree with one of the testimonies that too many parts of today's global supply chains were built to break and without any regard for national security. China's accession to the WTO was, in my view, one of the greatest single American foreign policy miscalculations in U.S. foreign policy history and fueled the rise of a hostile geopolitical adversary, the likes of which our country has never faced. But we are where we are. My question is addressed to all witnesses. If you could wave a wand and get the administration or Congress to do anything, what specific types of bills or executive orders do you think the government could take to administer a shock therapy to revive our manufacturing base and secure our independence in critical raw materials? Maybe we can start in alphabetical order with the witnesses.
Okay. I don't know if I come ahead of Ilaria on this one, but my first names we do. I think, sir, that if I could wave the magic wand, I would have a few different things that we have to do, and none of them are surprises or anything else. Number one, I would increase our funding of U.S. manufacturing infrastructure and the scope of it to build up the capacity we have lost. Number two, wave of the magic wand, I'm having a few of these, would be to look very closely at the critical supply chains and, yes, impose some restrictions on who can buy into them, who can invest into them, and how we can protect them, both from the point of view of the supply chain and the technology that accompanies the supply chain. Third, I provide, with my wand, sourcing parameters that I would require our companies to look at and adhere to in terms of different products and industries as to where they can source, how much of a percentage can they source from a particular country, what their distribution is, what their diversification is, and what their regionalization of the supply chain should be. And finally, I would hit the education front, where we've lost a lot of talent, where we've lost a lot of research. We're desperately short of STEM talent, and we need to emphasize and fund those programs. Thank you, sir. That's over.
And Mr. Goebel, before we move on to the next witness, what types of infrastructure funding do you view as being particularly contributive to manufacturing activity? Is it transportation as infrastructure, energy infrastructure? I'm curious if you're thinking about specific types of infrastructure that needs to additional funding, or are you referring to infrastructure as a whole?
Specific types, sir. Specific types. Firstly, transportation. All modes. Air, road, rail, and ocean. Ocean transportation is now controlled by a few companies, and that's a capacity and risk issue. Secondly, digital infrastructure. 5G, internet, satellites, global positioning systems, and the cybersecurity that supports them. That's the second piece. And thirdly, you brought us energy. I have no answer to the energy, nobody does, but I do know that we have to be practical and see what energy our industries need to be competitive, as opposed to telling them they should do this or the other thing. So those are the three issues that I would look at.
Thank you very much.
Thank you. I would agree on the R&D and education piece of that Dr. Gopal outlined. I would actually increase R&D in efficiency, efforts to improve efficiency on the usage of these minerals. Recycling efforts, there's a lot of potential there as well. Alternative chemistries for a lot of these, batteries, for example. I think all these could then, certainly the research side of it could have more investment, but I think especially there should be a framework to help them commercialize, which is where China has really excelled and the United States has generally lagged, right? We generally have very strong research in American universities, and that doesn't necessarily get commercialized or produce a skill in the United States because that piece is missing, right? I know I'm talking about something that you're all familiar with. The second part is that I think there's a potential for more, and I think this is already happening, but it could be, I think, enhanced partnerships with other countries and collaboration and in seeking ways of, enacting de-risking. It just cannot be done only in the United States, right? I think autarky is neither desirable nor achievable in this sense. And then third, I think, the permitting reform conversation is the one that's important, and that's already undergoing. It's a complicated one, but obviously that moving that forward would be important.
Thank you.
Commissioner Price.
Great. Thank you both for your participation today. Several of my questions have been answered in part, so excuse me if I'm a little redundant. But before I get there, Dr. Gopal, in your recommendations, you talk about mapping of critical supply chains. My first question is, do we have the data that would allow us to do that? Number two, what already exists? And number three, we don't seem to have a whole lot of time. How long does something, when you came up with this idea, how long were you thinking this would take to do, and how do we implement? So why don't you go ahead, and Dr. Mazzocco, you can add in if you'd like.
Thank you, ma'am. Let me start with the last one first. How long do I think this would take to implement? I think no more than 6 months. This is an exercise that requires a lot of thought, but not that much data. Because let's just take a simple one of semiconductors, the different types of semiconductors. We know it's critical. What are the industries they go in? We can get that from the semiconductor industry. What are the industries that depend on those? So semiconductors drive computers, defense, all of these, which in turn drive airlines, tourism, information technology, and all of those, which in turn drive a whole lot of other things. I think we can map the cascading effects. The key here is mapping the impact. And that will require some modeling rather than much data. But I think that can be done fairly quickly with a solid task force. And I don't believe it should be made too complex, because complexity is always the enemy of action. And I think it should be made understandable and fairly simple so that you folks in the Commission and the government can prescribe actions to work with the front end of those, the critical supply chains. I hope that answers your question, ma'am.
Do you think we have the data that we need, though?
I believe we do.
Okay. Thank you. Do you have anything you'd like to add?
My sense is that a comprehensive analysis and data collection effort on the on the upstream side of critical materials would probably be, it would require some effort in collecting all the data, putting it all together. I don't question that the data is out there. I think finding it and making sure it's up to date and actually understanding what is happening on the ground. I think in many cases the mining is happening in countries that might not have very good data. I think of the cobalt industry in the DRC, for example. There are, understanding which mines are open, which ones are, who is relying on artisanal mining, right? I think, there are efforts there and there is definitely data out there, but I think it might take, from my perspective, it might be a bit complicated by that. But that might not be what Dr. Gopal is suggesting. I do think it is important to have a sense of all the players involved. That might not be, completely comprehensive, but I do think my sense is that there is quite a bit of confusion at the moment due to not very good data on exactly which types of Chinese companies are involved at which levels of the supply chain and which foreign companies and what type of foreign investment, non-Chinese companies are also involved in those and who are partnering might be in some points with the Chinese companies as well as what the host governments are doing and how much they control some of the supply chain as well.
Thank you. Dr. Gopal, one other question on clarification on the the recommendation you have about talent. Just a few minutes ago, you also said something about we need to restrict foreign enrollment. Can you clarify what you're talking about?
Absolutely, ma'am. So let me start from the top. Our universities today are getting increasingly dependent on foreign students, Chinese students, who pay full tuition. That's point one. Point two, there are disciplines that the government pays for research, that the universities do, that are critical to our national defense and to our economy in some ways. We have to vet seriously the students who we allow to enroll in that, so that this is not a revolving door and a straight pipeline back to China or Korea or Russia or wherever of our technology and the research. And as Ilaria pointed out, coupled with that should be the ability and how do we apply this and take it commercial and take it to use. So yes, the answer is we have to look at who we have enrolled into many of these disciplines in several of our universities and take a good hard look at that. Over.
Thank you very much.
Commissioner Shriver.
Just add my thanks to the witnesses. I think most of my questions have been addressed, so I'll pass.
Thank you. Commissioner Wessel.
Thank you. And Dr. Gopal, I appreciate your recognition of Rana and Barry's work. They've been toiling in this field as you have for many years. You referred to and used the term willful blindness, and I appreciate your recognition of the long-term work of this commission. But I would argue to you that willful blindness continues to cloud visibility as to many of the challenges we face. Recently, in appreciative of the work of the administration on an outbound investment executive order, it is still limited in terms of providing us the data on critical supply chains, batteries, pharmaceutical, et cetera. We have existing U.S. authorities that this commission has referred to in the past. For example, it's the Department of Commerce, the power to compel any multinational business doing business in the U.S. to respond to questions. That could be used to provide us data on supply chains, whether it's in batteries, critical minerals, materials, aerospace. And you serve on the Defense Business Board, which I think has mostly been focused in the last couple of years on talent pipeline issues. But what new tools in terms of transparency and data do you think would be needed? Dr. Mazzucco, for you as well, I think, for example, Ford's efforts with CATL on Blue Oval, don't fully identify what's happening in the battery supply chain and the IP that is being utilized there. How do we get the data in a granular sense when business has been opposing, any of those data transmission efforts? Dr. Gopal, do you want to start there?
Yes, sir, I'll start. You've posed the question of the decade. In an economy like ours, how do we get business to help with the national profile? And we've seen what's happened in the past. The only way I can think of, from a purely simplistic view of an executive, is mandating the data, making sure that the data is going to be highly confidential, the security of the data, but in effect, mandating the data. And secondly, sir, it's looking at data as a tool and a weapon, because that's what it is. The warfare of the future is around data. So just not going overboard with asking every type of data, but asking for the little data that matters where we can make our decisions. I know that's a iffy-wiffy way of putting things, but it's actually true. We have so much data. We need to specify specifically what we need from companies so that you folks can make your decisions on criticality and policy. So it's focusing on the data and what data we have, because the data is there, the transparency is there. We need to focus on the what.
Let me pull on that if I can, because again, you're a member of the Defense Business Board, which has leaders of industry from CFOs to CEOs and otherwise, all of whom depend on data to make the right kind of decisions for their businesses. Should that be a higher priority at DoD in terms of supply chain transparency and transparency in a BPI sense? I don't mean that it has to be fully expressed, but we don't know where all the critical minerals come from or where the processing facilities are. China just became sold its commercial jets, the C919, and is going to be making further incursions into aerospace. what would you, as a business leader, need? And you can do this as a follow-up. And are you seeing enough within the defense establishment to be able to get the kind of data that's needed to make those decisions?
The short answer says yes, certainly. Everybody recognizes the data, the need for data, and what we call the infrastructure that the data needs. And yes, we may not have all the data you're talking about as a country. I don't believe we do, or as companies. But yes, I think we're on the path to getting that. But I still think that from the private sector, we need to mandate the turning over of the right type of data, because they collect it.
Dr. Mizuko, a quick response.
I think it's a very broad question. I appreciate the challenge there, and I think there's different parts to that. I think, to be honest, if I have to pick something, what concerns me more is lack of transparency on Chinese companies. I think in the previous panel there was discussion about poor access to economic data in China. So if something that I would focus on, which I do think is data that is going to be increasingly hard to get, is the actual Chinese supply chains, and what which companies are operating in which sectors and their background when they're, for example, doing FDI in the United States. Something that I think came up with CATL, for example, recently. So I think that's one thing to focus on. That's probably going to require a lot of external research, auditing, and perhaps even some level of high-level dialogue with China, right, with the Chinese government, because this is obviously part of an ongoing challenge there that may be undermining American and companies in the United States, in China, operating in China as well. So that's one piece of it. I think the other piece is, I think you mentioned IP. In the CATL4 deal, I cannot speak to that obviously, but I do think that's an interesting point, and that's, I think, points to something that indicates a reversal of previous concerns in the United States, where that American companies were giving away IP to Chinese companies, but now we are much more concerned about Chinese companies actually providing access to their IP to American companies. I think, again, that's something that should be explored and should be clarified in the legislation. Right? I don't think there is any requirement for CATL to give its IP to Ford, for example. So I think if that's that's identified as a real challenge, and that's something that should be clarified, as I mentioned before. Right? There's identifying actual goals and what companies can and cannot do in the United States is probably important. I think that's all there's time for. There's a long conversation. I'd be happy to have it at another point in time if there's more questions.
Thank you.
Thank you. Commissioner Wong, do you have questions?
Yeah, Dr. Mizuko, thank you for your testimony. I'm just having, I don't know if you have it at hand because I'm having trouble finding the actual number, but what is the current Chinese tariff on U.S. auto imports? I
can't remember it off the top of my head right now. It's significant.
Yeah, I remember they raised it to 40% at some point in 2018, and then there were some reports they were going to lower it, but I'm not sure if they ever did that, and if it was a part of the phase one. I just can't remember. But suffice to say, I think there's at least still a 25% tariff on U.S. autos in China. There had been a long time disparity between the tariff we had placed on Chinese auto imports before 2018. I think it was like 2.5% before we raised it to 27.5%. But this goes to my question. I mean, would you agree with me that the Chinese advantage in EVs came out of a combination of a number of policy choices? One are the subsidies, the purchase subsidies you mentioned, which were tens, if not hundreds of billions of dollars. Second is protection through tariffs of their market, which is the largest automobile market and largest EV market in the world. The U.S. is second. Number three, lower environmental standards, which allows them to refine and mine critical minerals at a much cheaper rate, as well as lower labor standards. And I think importantly, at least at the beginning of the EV industry in China, the theft of intellectual property from Western companies, and particularly American companies. Are those factors correct in what has built the Chinese advantage?
I think, yes, they all played a role. I would say also they came at the right time. Right, I think these policies were initiated around 2010, and by 2015 we started seeing the technological advancements in a lot of these areas, and at the same time Chinese consumers were really interested in EVs, which is something, to be honest, I don't think many even predicted in China. So I think there's a convergence of various factors, but I think the ones you mentioned all played a role. I would say that the tariffs into China probably were especially significant in ensuring that companies invested domestically in China to produce capacity. Certainly, I think that was the case for Tesla, for example. And one more thing, I think, to qualify for subsidies in China, the vehicles had to be produced in China.
Okay. And if I'm not mistaken, I think the tariff levels between the United States for a long time, between the United States, the tariff levels that China applied to the United States versus those they applied to European cars, they actually had higher tariffs on U.S. cars for a long time, and I think still do. Am I right about that?
I actually am not sure. I'm sorry. I don't have that data at hand.
Yeah, we'll research that. That goes to my question. I mean, would you agree then there's kind of I think there's clearly a strategic valence or a strategic impetus behind these policy choices. Namely, it seems that there's a conscious decision by the Chinese to develop, obviously, an industrial leadership position in EVs, but in particular to build dependence throughout the Western world, including in America, on these technologies, but also to undermine the U.S. industry. Is that correct, or would you disagree with that?
I would say that when the policies were first launched, the actual focus was to reduce China's dependence on foreign technology. So this was very this was very clear. They identified a technology that where where Chinese companies stood a chance to compete more directly with Western and the non-Western foreign automakers. Since I think basically since the 1980s, there had been several policies in place in China that aimed to do that and had completely failed in the internal combustion engine vehicle industry. So, for example, the reason why there's so many joint ventures between foreign companies and Chinese companies is because that's mandated as an effort to help Chinese companies upgrade, and that never really led to their advancement in the industry. So by shifting towards electric vehicles and investing in electric vehicles, the hope of the Chinese government would be that a more, obviously we've talked about how it's not necessarily a homegrown industry, but a homegrown technology, but a technology that was developed further in China and where supply chains could be more controlled by Chinese companies would reduce their reliance on American and European and Japanese automakers. So I would say that's most certainly what happened initially. I think as the time progressed and as the industry really took off, and I should note that I think based on my research, when these policies were first launched, they were fairly obscure and not necessarily something that most of the Chinese government was focused on. But after a few years, they really took off. The market was really developing, and I think that's when we see more of an understanding of the potential of this industry as an export industry. And I think certainly now, I'm sure there are considerations about how this could be increasing foreign dependencies on China in line with dual circulation. I don't think that was the case originally.
Okay. I appreciate your answers and the suppleness of your research. I just think a lot of these factors we'll have to consider, and I am very worried and question the wisdom of what I see as the current trend in the United States of adopting policies that essentially dovetail with that strategic impetus of China, namely subsidies for purchases of EVs in the U.S., outright bans on internal combustion engines, and either bans on or extremely difficult permitting processes for mining and refining here. That would seem to back us right into the strategic pocket of what the Chinese are trying to do in the EV industry. I think we have to take a very strong look at that. But thank you for your testimony.
Thank you to our witnesses. This is the last hearing of the, unless somebody else has some burning issue. This is the last hearing of the year. We will begin, we are in the process of wrapping up the annual report, but we very much appreciate you coming and offering your observations today. So with that, the hearing is adjourned.
观众朋友们好，感谢大家来到今天的这个思想先驱报节目现场。节目刚开始可别瞎说怎么20分钟解决任务啊？刚才我们做完节目，我连去洗手间的时间都没有。所以大家知道，我们今天这个任务之所以结束，那其实呢不仅仅是节目内容的问题同时呢也是一些具体的现实生活中的一些时间的这样的一些不得不遵循的时间的限制给我们带来的节目时间的压力。在今天的节目中我们继续为大家带来的仍然是跟中国经济有关的相关讨论。在过去的这一周来自《华尔街日报》的一篇文章可以说是引起了外界很多的关注。文章呢出自于魏玲玲女士以及合作者范一新之手。那么这样的一篇文章透露了一个信号，就是现在尽管外界对于中国政府推出更大胆的、更激进的刺激措施有很大的这样的一种希望，但是中国的领导人习近平似乎越来越显示了某一种保守的倾向，对于西方国家通过直接发现金或者是增加福利来刺激消费、救经济，这样的一种可以说是过去历届西方国家走出经济危机的一个颠之不破的模式，似乎是存在某一种根深蒂固的反对。那我们也知道8月16号在《求是》这一本杂志上曾经发表过习近平内部讲话的全文，其中在谈到中国经济的时候就说习近平指出，中国政府希望避免采取西化刺激政策，而是敦促人们要有耐心那么呢，《华尔街日报》的报道就引述2位了解中国决策情况的人说，之所以在8月16号这一天才发表这一篇习近平在好几个月之前的内部讲话，实际上呢是一种刻意的安排。中国最新公布的一组经济数据显示，经济持续疲软，要向外界传达这样的信息，就是并不是我们的经济不可控了，而是我们有意不为之。这个时候才公开了习近平的全文讲话。这一些政府顾问也向《华尔街日报》透露，中国领导层现在需要回击国内外敦促中国政府采取刺激措施的呼声，尤其是有关于要推出向家庭消费倾斜，而不是其他政府项目的一揽子财政计划。因此，以在《求是》杂志上发表习近平讲话这样的形式，来巧妙地回击这一种压力。学习时报后来呢也发表了一篇文章，其中就解释为什么不向消费者发放现金。我记得我们之前在华尔街论坛的节目中也讲过学习时报的这一篇文章，认为这样的一个方法成本太大，在中国不可行。又说，如果是以政府项目为主导的刺激方案，好处是不仅仅是刺激眼下的需求，而且还能够形成增长真正的动力。《华尔街日报》的这一篇报道引述了解北京决策的人士说习近平之所以对于以消费驱动增长的模式存在根深蒂固的反对，是他认为这样的一种增长模式浪费太大，不利于把中国打造成为技术强国和工业强国，与自己既定的国家发展目标并不吻合。文章还说有的人士也相信习近平认为中国应该坚持财政纪律，特别是在债务负担相当沉重的情况下，因此各种情况综合来看，似乎是不大可能推出美欧式的福利政策了。那我们也知道过去中国的这个社会保障、社会福利一直是各方讨论的关键。中国的医疗福利还很不健全，失业救济覆盖面也不够完善，整个的GDP 消费贡献的比例与西方国家相比也有比较大的差距。 而分析者表示，现在其实情况已经很清楚了。并不仅仅是中国经济面临的问题需要这样做或者是那样做，习近平本人的意识形态也起到了很大的作用。他不希望建立西方式的福利国家。那习近平为什么对于西方式的福利国家这么的反感呢？有分析说说这可能是与习近平在文化大革命期间的经历有关。认为呢，习近平在文化大革命期间呢，经历了很多艰难困苦，筑窑洞、挖沟渠。因此他始终强调艰苦奋斗是一种美德。那么跨国机构也呢需要中国政府给出一个解释，就是为什么中国不能够直接刺激消费？这不是有利于中国更快地走出现在经济的困境吗？而决策者认为，消费者即使手中有钱，可能也是存起来了，不会花出去，对于经济的刺激效果有限。所以不如直接调配到国有部门，这样才可以可靠地促进经济增长。目前，中国政府对于刺激经济的一系列举措也始终范围比较小，力度不够，而中国的信贷需求仍然较为差，而几次降息对于经济活动的刺激效果似乎也有限。投资者这一次恐怕他们的希望又要落空了。那我想请问一下何明先生华尔街日报的这一篇文章，今天早上呢，我们也引述相关报道，在华尔街网报节目中为大家进行了介绍，其中就透露出了几个相当关键的信息。第一，中国政府是不会采取西方式的以消费刺激经济，导致经济回暖走出现在低迷的方式的。第二呢，就是这样的一种哲学与习近平本人的经历是息息相关的。他走过文革认为到吃苦是最重要的，不希望建立养懒人的福利社会。而第三个问题就是，习近平始终的国家发展目标还是把中国建设成为技术工业强国，因此呢，越是这个出现这样的经济问题，越有可能加重国有经济部门的这样的一个比例，希望能够通过国有经济部门这样的一些关键重点行业的发展，拉动整个经济的长足发展和进步。对于习近平这种想法，你觉得是不是有道理？还是说在面对现在眼下的经济困境的时候，这一种举措可能是得不偿失的？
有一些说法是也不能说没有道理有一些说法呢也是值得疑惑。习近平的问题就是说，他是不是经历一个刚性社会？这个刚性社会的特征就是没什么弹性我就要求大家在意识形态是这样，或者是我的体制也是这样。就是过分的这个精确化和刚性呢，恰恰就是法西斯纳粹分子他们一直想做的事情，对吧？就是我要建立一个非常的按照我的存在的意识形态所建立一个国家。那资本主义和自由社会的一个特征就是给社会给这个民间甚至给政治有一种更加的灵活性和弹性。这样的话呢，当这个社会产生危机的时候它有一些缓冲性的作用。习近平的这种刚性思想是不是他的主导是文革的时候造成的，意识形态造成的，我们还要仔细去观察。但是从现实政策来讲，我不认为习近平的这些政策又错到哪个地方去。为什么呢？第一个就是如果经济真的是出现停滞了，不前进了比如说你像美国疫情期间从餐馆到运输系统到各个系统基本上处于一种停滞状况。在这种情况之下，如果你没有这个现金的刺激，老百姓手里本来就没有钱那么这个跟中国习惯不一样，那你经济就激活不了。当经济激活不了，你这个产业链供应链就会停滞下来。等到你开放疫情的时候，你可能就像我们之前李奇博士也讲过，你真的重新把开关打开，也并不意味着经济马上就激活了它就让这个经济保持一定的供应链的这种活跃的程度。那是在美国经济处于非常危机的时段，我觉得美国发这个现金也是对的。但是发现金造成的灾难和问题黑洞其实是非常之多的。但是美国这个国家它有很大的承受能力，中国就未必有这个承受能力。你比如说美国人如果发1万块钱，对吧？对于今天的消费者来讲，1000块钱没什么用，1万块钱发起来，你说全国有多少个亿？另外就是中国老百姓和美国老百姓不同，就是说老百姓 美国老百姓没钱就真的没钱，中国的老百姓吧，我不能说很富有啊，但是你可以说是手里的这个存款是相当多的，这些数字里面都反映了这一点。如果你又给他这个钱，那么他又不花，那你这目的达不到。所以有些地方采取的方式就是发这种消费券，对吧？在若干时段之内你要去消费。但是我从各路朋友所得到的消息看呢，就除了很顶尖的这种奢华的那种餐馆以外，一般的餐馆现在生意其实已经慢慢恢复正常了。旅行线呢，相当多的旅行线也是恢复正常了最近有一些教授曾这个他到中国去度假嘛就是在美国当教授的几位教授都跟我讲了这个情况。也许他们去的地方可能不太一样，但是整体给我的感觉就是说，一般的中国的消费实际上已经恢复了一定程度，只是说以前不像以前那么大胆花钱，就是说比较节省能去比较便宜的地方就住便宜的地方。那我觉得这是一个正常的社会的一个正常反应呢，因为早几年中国手里那个对这个未来的消费信心有非常之大，现在是没有那么大的消费信心，但是人们的消费的这个情况并不是熄火了所以真正要解决的就是说，中国的是一个社会保障体系问题。当社会保障体系没有建立起来，人们花钱过分的谨慎，你这个内循环就做不起来。那么你怎么建立这个保障体系，同时又要防止像西方国家这样福利有时候并不是照顾了真正想照顾的人，或者说呢过宽的照顾给穷人，或者是造成矛盾懒惰的现象。习近平也讲过这种情况。习近平第一次出国他不是到美国来，也不是到别的国家，第一次到出国是到这个北欧。
对
你记得吧？
对
他在北欧的话，北欧的福利主义，北欧的社会的这种体制社会的稳定，应该是给习近平那样一个非常贫穷的政治斗争刚刚醒悟过来的中国的一个官员来讲，应该是非常大的一个印象可能给他某一些印象我不知道，因为美国人考察西方他得出的结论是不一样的，同样的事情可能美国人感受不一样。当然现在因为习近平的简历放在这个地方，我们很容易从他的简历去理解，但是我觉得只是一方面而已，因为他也是从福建、从浙江、从上海这么走过来的，各个阶层的人他多数还是有些了解的。中国是要建立社会保障体系，所以他扶贫非常的积极，但是他也不愿意建立一个大福利社会才能去影响这种中国的这种工作的热情。我觉得习近平他的思想永远是在既要又要还要他现在都要所以呢他不是那么的，而且他的这个政策吧最大的一个特点是，还有一个政治家的特点，就是说他不求短期的反应他比较追求是长期性的规划性的事情所谓的定力也好，所谓的有战略思想也好。因为中国的经济过去几十年不是说衰退，而是说过热之后所产生的泡沫和问题，可以说积累了30年，正好在胡锦涛的后期就是要开始清理了。但是胡锦涛和温家宝当时他们还是向现实妥协了然后给了这个更多的现金，给了更多的投资那么就加重了后来习近平上台之后处理这些问题的难度。现在的这个社会吧，因为习近平在台上他又有不愿意下台搞了10年还继续搞下去然后再加上整个的新闻媒体简直是丑陋无比粗暴无比，政治上也是很粗暴在法律上采取很多措施很粗暴那么怨气呢怨恨可以说都是集中在习近平身上。那么你习近平是中国最高领导人，老百姓也好，其他人也好，发怨恨也不能说不对，但是呢，他不是问题的全部我看一些朋友把写成今天中国的经济问题都是习近平的问题。这个就是说不是说习近平不应该承担责任，而是这个是会错误的理解 今天的中国的经济问题的本质性和习近平或者是未来中国处理经济问题的一个思路。如果你都认为是习近平，那很简单，把习近平干掉嘛，对不对？如果不仅仅是习近平，参加习近平可能也是在解决某些问题，那未来经济的结论就不一样。所以我看一些西方媒体的一些评论，或者是有些朋友的评论，我不同意的地方就在这个地方。习近平不是说对今天的经济没有责任，但是你把今天的经济的责任主要的放在习近平身上，那不是说习近平应不应该承受责任的问题，而是说你会让你对中国的经济情况会产生一个错误的判断。
好，谢谢何明先生的点评啊。这刚才何明先生说的几个观点啊，我也是比较同意的，稍微补充几点。那么来自华盛顿邮报的有另外一篇文章，我觉得对于华尔街日报的这一篇文章就是一个很好的补充，其中啊就提到了整个故事的另外几个方面。那我们知道中国政府之前也曾经面临过出现经济衰退到底应该怎么办这样的一个问题啊。比如说在2008年的时候，当时呢由于全球金融危机的影响，中国也出现了经济下滑迫在眉睫的时刻，而当时中国政府的应对措施是什么呢？就是大规模刺激以债务为基础的房地产和基础设施建设。的确当时啊是让中国的经济很快就脱出了2008年全球经济金融危机的陷阱。这呢也让当时的中共领导人多了一种自信，就是美国呀以及你们这种自由主义啊、任求市场啊、胡来这样的模式其实已经破灭了，已经不再是神话了。我们这一种国家引导的发展模式才更加行之有效。习近平自己也经常说啊，东方崛起西方衰落啊，美国是全球经济混乱最大论源呐，等等等等。但是在2008年的时候，看来那一些成绩或许有效，但是现在呀，可能大多数的经济学家都会达成共识，这样的一个政策正是今天经济出现深层危机的一个不可忽视的一个长期的原因。现在呀，不管是地方政府还是房地产开发商，他们所面临的资金紧张和债务过度，其实就是过去过度投资的直接后果。如果现在重新来上演2008年的这样的一个剧本，的确可能会缓解眼前的压力，但是债务可能进一步出现螺旋式的上升，等于习近平这儿的这个皮球啊，又踢到了下一代，而下一代再来捡过中国债务烂摊子的时候，可能情况比今天还要更加的危急。这呢是非常重要的一方面。但是啊，来自华盛顿邮报这一篇文章啊，也提问了另外一个问题。习近平一直强调共同富裕，共同富裕，共同富裕这个词本身就带有某一种福利主义的性质和特征。所谓的共同富裕，强调的是在整个收入啊分配时要更加的公平和合理。但是习近平既是把共同富裕放到了整个政策议程的核心，现在呀，在提到福利主义的时候，又出现了这么大的抵触情绪，让人觉得似乎释放的信息有一点矛盾。习近平在81岁的时候就正式结束自己的第3个任期了，届时他是不是能够完成向中国人民交出的答卷，这现在也是一个需要打上问号的问题。那我们也知道，不管是共同富裕还是先富带后富，都需要一定的物质基础。如果中国经济真的是出现了严重的放缓，这恐怕对于习近平本人也是一个信誉的伤害。我们知道，中国没有选举政治，没有多党轮换执政。但是分析者也普遍认为，在中国呀，大家对于这个执政党最大的信任是他们自己的感受现在生活怎样，感受未来前景如何，而不是我们说真正意义上白纸黑字的经济数据。现在很多中国人的确是感受不太好，企业家对于未来觉得非常的彷徨。很多知识分子觉得对于意识形态的高压非常的反感，年轻人对于未来的工作前景也觉得不那么乐观，很多城市的中产阶级也对于整个国家未来发展之路觉得多了很多不确定性，而这更增加了人们对于习近平领导下政治风向和政治政策还有经济决策的深深的忧虑。对于外企而言，不管是国家安全法还是之前疫情的封锁造成的这一种不可预知的干扰，也让他们觉得中国这个国家我们不再读得懂了。我们此前呢，在节目中为大家介绍到外交关系委员会中国问题研究员 Zoe 刘，他说习近平并不是当前所有经济危机的制造者，但是现在所有这一些危机突然在这么多不同的问题上同时显现出来，与政治实际上是息息相关的。现在中国政府的反应不温不火， 央行也说经济复苏前途曲折，中国的房地产行业仍然一蹶不振。分析说，问题就在于北京既知道情况很危险，但是又不希望继续吹高泡沫。泡沫现在渐渐开始破灭，但是到底是一种什么样的规模、什么样的速度破灭，到底会对于中国的经济产生怎样的后果，现在仍然是一个未知数。中国是不是会造成引发全球危机的系统性危机呢？人们警惕，但是市场似乎发出的信号并不与这种悲观情绪相吻合。这就要说到我们今天要为大家介绍的第3篇文章。这一篇文章来自《金融时报》，作者呢也是我们之前经常为大家介绍的 Dan Wang 所在的Gavico 这样的一家咨询机构的一位分析师。他就说说现在中国的经济的确不景气，但是中国的经济距离形成危机似乎还很远。为什么这么说呢？我们应该从市场资产价格来看，因为任何的一次金融危机出现之前，银行的股价往往在危机爆发前的好几个月甚至是1年就开始出现一些信号。比如我们看到在2007年1月开始之后的1年半里，标普综合1500银行指数是下跌了66%，而同年6月雷曼就倒闭了。如果我们再看到以 MSCI 欧洲货币联盟银行指数衡量的欧洲银行，在2010年到2011年欧元危机的时候是下降了34.5%。当时呢，欧元区的外围国家的主权债券的收益率已经开始出现了飙升。但是我们看到，在过去12个月里中国的银行股实际上是上涨了2.4%。如果按美元计价，中资银行的表现实际上比美国的银行高出了12.6%。在一次新兴市场的系统性危机里如果当地银行的年内涨幅超过美国的银行2位数，到底应该怎样解释呢？在作者看来，答案其实只有2个。第一，要么这是一次前所未有的危机，咱们从来都没有见过的一次危机，要么就是根本不存在这样的一次危机。还有另外一点，相对于被视为传统避险投资的美国国债，中国的国债表现现在仍然是大幅领先的。在疫情封锁之前，中国国债和美国国债的回报率基本是一样的在同一个时间框架内是一样的。但是在疫情封锁还有美国进行扩表之后，实施了截然不同的政策选择。中国的长期国债回报率是17.1%，美国的长期国债回报率是负13.4%。不到3年的时间里，地方政府债券的表现已经比美国国债高出了30个百分点。如果真的是中国这个新兴市场会出现一次系统性的金融危机，还是刚才那句话，2种可能，要么就是这个危机是史无前例的一次危机，市场经济学家从来没有见到过这样奇怪的信号，要么就是这是一场根本不存在的危机，根本就没有大家想象的系统性的金融危机。那作者就接着说说这个中国股市今年的表现仍然是非常让人失望的。政府债券走势、外汇市场变化现在呢也比较变化莫测，同时也不太好分析，因为中国政府仍然对于外汇和债券的价格有很大的控制权，因此这些价值信号本身有多大的含义，可能仍然有很大的偏差。但如果我们看到中国以外的其他地方，大宗商品价格一路走高比如铁矿石是对中国最敏感的大宗商品价格，现在已经从去年10月的低点上涨了50%。即使中国经济的负面影响不断扩大，铁矿石的价值还在上升。对于中国敞口最大的这一些西方的公司，比如法拉利爱马仕等等，股价表现特别好，而事实上大多数奢侈品的生产商的股价还是接近历史高位的。如果中国真的是面临系统性崩溃，真的是没有见过这样的我们叫做反常的信号，那到底是怎么回事呢？作者就分析实际上呢，现在还是存在过度的负面情绪，在中国经济本身不景气的推动下有的时候市场的负面情绪可能会把大家对于整个情况的把握推向另外一个极端。作者又举了另外一个例子，澳门赌客的数量最近已经一路飙升，回到正常水平了。中国国内的旅游业也出现了广泛的回暖。 6月和7月虽然汽车的销售量从数字看有所下降，但是今年年内整个汽车的销量仍然在继续提振。我们再看到阿里刚刚公布的第2季度的财报显示，销售额也恢复了增长，因此中国经济似乎并没有出现内爆或者是巨大的系统性的摧枯拉朽式的危机这样的特征。当然了，这呢是我们就说纯从资产价格这个角度对于中国金融风险的一些分析。不能否认的是，中国经济结构性和周期性还是在放缓的。但是作者最后得出了一个结论，说现在呀与中国有关的资产价格的行为，或许呢可以让我们心里多一点信心。如果你不认为中国这个国家就是前所未见的，它的国家就是它的这个金融危机产生的模式就是与世界上所有的金融危机都是反着来的，那么现在我们对于系统性危机的担忧似乎是与现实严重脱节了。那么对于这样的一篇文章，何明先生我们应该怎么看？
佩服我非常佩服这个读者在这样一个声浪之中还能够如此诚实的讲出中国的经济的他的一些困惑。他的这个困惑不是说中国不存在危机，而是说在讲中国危机的时候，另外一些情况恰恰是我们在讨论问题的时候忽视的。现在绝大多数的文章是没有价值的，讨论中国经济的问题，无非不过是就业率很低但是只讲到青年就业率就没有讲到一般就业率，而且不讲一讲青年就业率为什么会这么高到底是什么原因，这个里面的复杂的程度很多，只讲到房地产的这样一个衰退或者是崩溃或者是怎么糟糕，不想到其他的产业方面的巨大的变化。中国清洁能源，中国的建筑能力，中国在其他的新兴科技方面的领先的地位或者是潜力，大家根本就视而不见也视而不见呢。整个实际上是应有的一些调整，而不是说完全爆来这个跟这个亚洲金融危机这个南美的陷阱或者是美国的次贷危机是不一样的经济的表示方式。另外就是忽视了中国的政治的经济的这个互相的这种掌控能力它并不是说由老百姓手里突然之间像美国一样的只能跑到街上去住了，对吧或者是像南美这样就完全控制在这个外资手里资金一来就来了，走就走了，对吧？也不像这个跟美元对接的刚刚对接的这个泰国一样的，对吧？你一下子被这个一个这样的一个叫什么鳄鱼是叫什么当年那个索罗斯给他一个非常恶劣的一个词很多人对他恨之入骨对于很多人讲那是一个巨大的伤害。中国现在的危机大家看到的现象都不能说不是现象，更重要的是一种怨恨更重要的是一种失望，更重要的是一种沮丧更重要的是对现在的政治的压制的一种厌恶，或者是对这个一些政治口号的一种恐慌，而忽视了中国的经济的基本的能力，也忽视了中国的现在的基本上的潜力，更忽视了中国现在的某一些产业方面的一种优势。所以在这种情况之下，我认为《经济时报》这篇文章它也不是说否认这个问题的严重性，而是说提出了另外一些角度。所以我非常感谢李奇博士找了这样的文章。我也希望我们的观众在看待中国问题的时候，不要跟队一起去实现那个所谓的自我实现的日拟。什么意思我不认为这个自我实现的日拟是这个国家会变成你们所想实现的日拟，而是你个人可能会变成这样一个灾难性的日拟中间实现的一部分。你真的去躺平了，别人躺平了吗？你真的去怎么样了？别人会像你这样吗？中国30年有的人已经积累了1年的财富，他可以躺平，他也可以到美国躺平，他也可以在中国躺平，他也可以跟你一起怨恨。如果你还是在拼搏中间，你还是在改变人生过程中间，我不认为中国在未来几十年之内，它完全失去了这个变革的可能性，甚至恰恰相反，中国的经济的活力在未来几十年几乎在全世界都是很难以替代的。 至少在新兴的这个制裁业方面，中国的领先地位几乎无可匹敌。我们在几十年来看西方媒体对中国的报道，多数的情况之下就是唱衰，因为唱衰符合他们的心理预期，所以讲中国是血汗工厂，讲中国是廉价劳动力，讲中国是劣质品种，这些问题在中国的发展过程中可能都存在过。对这个劳工权益的不保护啊，这个产品过分的这个廉价低廉，对吧？对西方市场的这个冲击，这些问题都存在啊，品质也存在的问题。但是现在中国在制造业方面的品质、基金方面的品质，在很多产业方面，我们开玩笑嘛，就是中国的模仿能力、造假的都甚至比原来的产品要好。中国的整个的制造业30年的奠定的这种基础仍然会继续延续下去啊！中国的经济根本就不像西方媒体，也不像我的那么多的朋友所描述的那么悲惨啊！如果你要跟队一起去实现这个日年，你就看看过去30年这些媒体是怎么描述中国的啊！他们没有一天真正诚实的面对中国的变化的良好的一方面，就是讲中国不好。这也可以因为有这样一种批评的声音，让中国或者是企业家就会做得更好，让中国政府现在的有一些恶劣的作为做出一些纠正是必要的。我认为批评没什么，关键是中国人自己，你们自己是不是真的愿意躺平还是愿意这个走线，还是愿意像我这样，就是愿意生活在一个自由的地方。每个人的选择都不一样但是我站在这个遥远的这个美国，我当然是希望能够中国变得更好一点所以我对中国的存在的问题有非常严厉的批评，但是我同时不是为了批评而批评，我看到了中国的潜在的力量已经在生长，而且没有因为过去的疫情会得到根本上的改变中国的整体的经济在未来会有一个非常好的一个重新起飞。
好，谢谢何明先生的点评啊。的确呢，这个作者我觉得给我们提供了事实的另外一方面，就是到底怎么样定性中国现在遇到的问题。我觉得他有一句话说的非常准确，就是说中国实际上出现的问题是系统性、周期性和结构性的放缓。那这个放缓呢，既是因为中国进入了一个新的我们叫做发展周期，同时也是因为之前积累的问题，高速增长带来的后遗症现在渐渐在显现。可以说是系统性和周期性的问题、结构性的问题，再叠加过去疫情封锁，再叠加政策失误，基本是这样的一个性质，我觉得定性就比较准确
对，
如果把整个中国的经济问题你完全说成是一次系统性的摧枯拉朽式的金融危机，可能会造成外溢式的这样的一个对于整个世界是一场灾难。我觉得最重要的一个错误可能就是大大的高估了中国整个经济的外溢性。因为我们之前在节目中也向大家介绍到整个的中国债务其实有2个特点：第一，大部分债权人在国内；第二，大部分的债权人是中国的国内的储户；第三，就是中央政府的财政实力仍然是相当稳健的。有了这一些因素，再加上整个金融市场的不开放导致中国经济再出问题，对于整个世界的系统外溢性都是比较小的，更多的是可控的是这样的一个形式。那么至于作者所说的资产价格呢，这一点呢就要提出一些不同的看法。他提到了几种不同的资产价格，但是没有提到全部。有一些资产价格也让人感觉到现在情势不是那么的乐观，但是大致的分析思路我觉得是值得我们参考的。如果参考历史上出现的其他所有的新兴市场的危机，中国现在的资产价格都和过去那些完全是相反的。那么到底是不是中国会重蹈之前墨西哥的金融危机、东南亚的金融危机，还是更严重的金融危机，我们呢就必须进行更加谨慎的分析。谢谢各位观众朋友们对于我们的支持，感谢麦团，感谢如是我们，感谢艺人给我们节目的打赏这个何明先生还是这个我们叫做体力非凡这个上节目之前就说必须要去洗手间，到现在仍然是这个做的十分的端庄严肃。那我们不强迫何明先生继续做下去了。今天节目就到这里，明天同一时间思想先驱报与大家不见不散。
欢迎您收看华尔街评论，疗愈文化对我们有益还是有害？纽约时报评论版。在一封致编辑的信中，几位读者对大卫·布鲁克斯的专栏文章《嘿，美国长大吧》做出了回应。在他的专栏中，布鲁克斯认为对创伤的强调使得成年人变得不成熟。一位读者，一位精神科医生，同意布鲁克斯关于创伤的观点，但认为在识别和解决患者过去的真实创伤时，重要的是要避免受害者心态。 另一位读者，一位退休心理学家，指出许多心理治疗师对创伤概念的过度扩张持有抵制态度。虽然创伤文化在社会中可能很普遍，但这位读者认为围绕创伤的炒作可能已经到头了。另一位读者，一位精神分析学家，不同意布鲁克斯的观点，认为在困难环境中长大的人，比如贫困或暴力环境中的人，不能简单的通过这些挑战来编织他们稳定的自我。相反，解决这些挑战需要社会变革和支持。另一位读者认为，建立成熟文化的关键之一是帮助美国人培养目标感。这位读者认为，有目标感的人更具韧性，更有幸福感。最后，一位律师回应了关于唐纳德·特朗普总统是否可以赦免自己的持续讨论，认为总统为自己的犯罪行为赦免自己是违反法治和权力分立原则的。加拿大真的那么友好对待移民吗？外交政策。加拿大总理贾斯汀·特鲁多扩大移民计划面临来自政治光谱两端的怀疑。极右派批评了这一计划，移民专家和倡导者则对政府在难民安置和住房方面的失败表示担忧。移民问题的公众舆论也开始转变，反移民情绪上升。此外，加拿大的住房危机已成为一个关键问题。批评者认为，在扩大移民之前，该国需要解决缺乏可负担住房的问题。加拿大为20年来最低，该国正面临租房缺口，预计到2026年将增加4倍。政府未能为难民和寻求庇护者提供足够的住房问题也受到了关注。最近有寻求庇护者在紧急避难所外露宿的事件。尽管受到批评和反对，自由党政府似乎对其移民计划坚持不懈。政府没有显示出减少移民目标的意愿，并被指责忽视了处理和安置新来者所需的资金和支持。因此，在特鲁多任期内出现的住房危机中，新来者可能越来越多地受到指责。关税人的回归。战略与国际研究中心。就在斯科特·米勒 （Scott Miller） 和我以及我们的贸易人波克再次舒适的休息在您当地报纸的商业版面上时，关税人又回来了，将我们重新推上头版。特朗普的关税是我们首次启动播客的重要原因。他在任期内对关税的不懈追求给我们提供了大量的讨论和取笑的素材。然而，从2021年开始，我们经历了拜登政府的相对平静，基本上是与任何人都不进行重要贸易谈判。正如我们的听众所知，我们设法找到了要讨论的话题，但没有了戏剧性，一切都不一样了。现在，多亏了唐纳德·特朗普，戏剧性又回来了。上周，他提议设立一个普遍的基准关税，理论上他似乎没有对具体数字做出承诺为10%，这似乎将适用于所有产品和所有国家。让我们快速看一下这个提议的优点，暂且不考虑它实际发生之前还有很多步骤。特朗普必须赢得选举，上任，制定一个更详细的提案，并找到一种合法的实施方式，国会无疑会对此发表意见。从宏观经济的角度来看，这样的提议，这是正确的方式，因为关税将适用于所有领域，你很难找到一个认为它们有任何意义的经济学家。他们将大幅增加通货膨胀，提高大部分商品的价格，因为国内竞争产品的生产商几乎肯定会利用这种情况提高他们的价格。企业和消费者都会受到影响，因为他们的进口零部件和组件将变得更加昂贵，导致他们的成品价格上涨，并使他们在全球市场上的竞争力降低。更难以量化，但毫无疑问的是，对美国出口的报复必然会产生影响。这些关税肯定会违反世贸组织的规则，其他成员国将有权对美国进行报复。特朗普的回应可能是退出该组织，这不仅将对基于规则的贸易体系造成重大打击，而且还将使其他国家可以采取任何他们希望采取的行动。在那种情况下，特朗普的回应将是反击，将美国卷入全面的贸易战。因此，很难在这个提议中看到任何好处，很容易概述如果实施了这个提议会发生的坏事。有些人可能还会试图将这个论点推广为对所有情况下的所有关税的攻击，这将是一个错误。在美国法律和国际规则中，对不公平贸易商品征收关税的权利已经得到了坚实的确立，以及保障关税的概念。暂时的行动旨在给国内产业调整时间，以应对进口激增。不仅美国成功使用了这些法律，其他国家也是如此。 但现在美国在微观经济层面上面临着关税人总统遗产的困境，他对中国征收的关税，特别是对汽车征收的关税，这些关税是 25% 加上正常关税 2.5%， 总共是 27.5%。特朗普之所以征收这些关税，是作为他迫使中国改变其经济政策的战略的一部分，但这并没有奏效，他可能没有对特定行业的具体后果多加考虑。他也可能没有预见到电动汽车EV业的过渡，这迫使全球的汽车制造商制定新的计划和新的供应链。中国在这一过渡中发挥着领导作用，不仅在电池和其他零部件上，还在成品车上。战略与国际研究中心的高级研究员伊拉里亚·马佐科 Ilaria Mazzucco 指出，去年 35% 的出口电动汽车来自中国，比2021年增加了10个百分点。其中大部分出口到欧洲，现在欧洲面临的挑战是国内制造商没有生产具有竞争力的电动汽车，尽管他们是从中国出口的公司之一。相比之下，美国目前还没有这个问题，这主要是因为特朗普的关税。这种情况可能不会持续，因为中国的电动汽车非常具有价格竞争力。马佐科指出，去年销售在中国的电动汽车中有 20% 的价格低于15000美元。而在美国或欧盟没有低于2万美元的电动汽车，因此我们面临着与欧洲现在面临的中国电动汽车问题相同的问题，以及我们在上世纪80年代从日本汽车进口中面临的问题。这一次我们的优势是我们可以看到它的到来。美国拥有工具，包括贸易法律，因为中国汽车受益于补贴，但在短期内，最好的防御是现有的特朗普关税。具有讽刺意味的是，关税人可能无意中给了我们一个恩惠，或者至少给了我们一些时间。现在由拜登政府决定是否愿意在支持国内汽车工业方面采取任何行动。威廉·雷恩斯在华盛顿特区的战略与国际研究中心担任国际商务学教授。金砖扩容，五国各自的考量与获益。德国之声中文网邓玉文。时评人邓玉文认为，中国虽然在这次金砖峰会上表现相对低调，但获益最大。大量新成员国的加入又是有怎样的考量？谁又是此轮金砖扩容中的输家呢？日前结束的金砖国家约翰尼斯堡峰会最让外界关注的有2点，一点是它的扩员问题，另一点是在金融上的去美元化问题。从5国发表的约翰尼斯堡宣言看，前者有突破，这次金砖峰会接纳了6个新会员，即沙特、埃及、阿联酋、阿根廷、伊朗、伊索比亚，后者则进展不大。宣言虽然责成5国财长和央行行长研究金砖国家之间的本币合作、支付工具和平台，鼓励金砖国家同其贸易伙伴开展国际贸易和金融交易使用本币，但会前一些观点提出的，本次会议有可能讨论金砖币或推出一个新的支付工具的问题没有出现。金砖组织最初是由高盛公司时任首席经济师奥尼尔在2001年提出的一个概念，当时指的是中、印、俄、巴4国，称为金砖4国。在头10年，金砖4国只是一个松懈组织，机制化和组织化都很薄弱，国际社会并不看好它能发展成为一个影响力的组织。2011年，南非加入，变成金砖5国，但国际社会依然对它不看好。不过，以5国的国土面积、人口和经济体量来说，已经不可小觑。由于中国经济的高速发展，近年来再加上印度，据估算，其2021年经济总量约占世界的 25.24%， 贸易总额占世界的 17.9%。虽然名义 GDP 还比不上 G7， 可实际 GDP 已超后者。如果再加上明年要进来的6国，恐怕名义 GDP 也超过 G7 了。与此同时，在过去的10多年，金砖5国的机制化建设亦有所加快。有这样的体量，自然会驱使5国释放某种野心，要在国际经济体系中占有一席之地，有话语权，尤其对中国而言。鉴于除中国外的其他4国的经济体量加总不及中国的2/3，长期来，金砖组织被看作中国要同美国争夺国际经济霸权的一个工具。观察家们一谈起该组织，都是中国如何如何。中国确实也在有意识地借助金砖平台提升在全球的影响力，但也因为中国的角色过于明显，其他4国，特别是印度对中国怀有芥蒂。相对而言， 印度对推动金砖的壮大消极得多。本次峰会前夕，西方媒体就放风印度和巴西反对扩员，总理莫迪很可能不会出席峰会。中国一清楚，若过于活跃，会引起其余4国，特别是主办国南非的某种不快，所以此次会议中国保持某种低调，南非成了主角。南非利用主办者的身份，动静搞得很大，把非洲的几乎所有国家、联合国等国际组织，以及想加入该组织的全球南方国家的领导人都邀请来了。他的目的之一是要在国际上突出非洲的角色。客观来说，不止中国、巴西、俄罗斯和南非都对现行的国际经济秩序不满，想提高以金砖5国为代表的全球南方国家在全球经济的分量和规则制定权，即便印度也是这种想法。5国中，印度和西方的关系最好，美欧因为抗中极力拉拢印度，而印度也有意配合。另外，印度可能也确实不想过快扩员，但这不等于作为该组织的一员，他就不想金砖5国在国际经济中有更大发言权。因为印度是发展中国家，现行的国际经济秩序本质上对他是不利的，他亦有改变这一秩序的愿望。提升金砖5国的代表性和话语权，印度当然也从中受惠。同时，由于他和西方的密切关系，还可以利用金砖组织抬高自己在西方的身价，算是一举两得。此次金砖扩员一下接纳6国，变成金砖11国，将会让这个组织变得名副其实，力量进一步增强。欧盟外交与安全政策高级代表博雷利8月25日在西班牙梅内德斯佩拉约国际大学参加一场活动时表示，金砖国家扩员将创造一个涵盖世界近1半人口的体系，同时也将带来一个非西方国家联盟，言下之意，西方要认真对待它。约翰尼斯堡宣言在序言中也指出，5国将继续致力于强化金砖政治安全、经贸财经、人文交流3轮驱动的互利合作框架，通过促进和平，构建更具代表性、更加公平的国际秩序，重振和改革多边体系，推动实现可持续发展和包容性增长。换言之，由于以美国为主导的世界秩序未能在经济发展和主权保障这2个全球南方国家的核心诉求上实质性支持他们，从而让全球南方国家产生了对世界秩序替代结构的需求。虽然这并不表示他们要对抗西方，也许中国除外。作为一个组织，金砖5国明年将是金砖11国有整体对外的一面。然而，就每个成员国自身来说，在扩员问题上确实想法不一，获益也不同。这次新进入的6个国家，中东3个，非洲2个，南美1个，而此前普遍认为最有可能第一批加入的印尼没有进入，在拉美的也是阿根廷，而非委内瑞拉或者墨西哥加入。这种安排背后有什么讲究？5国各自的考量是什么？探究这点，外界就能看清此次扩员究竟谁获益最多，谁可能没获益。很显然，就地域来看，沙特、伊朗和阿联酋得到了中国和俄罗斯的支持，因为这3国同中俄关系都很好。埃及和埃塞得到了南非的力挺，而阿根廷的背后则是巴西，或许还有中国。巴西总统卢拉和阿根廷现在的执政党关系不错，两者都奉行左翼路线。有鉴于阿根廷大选在即，执政党在民调中落后另一个右翼候选人，将阿根廷纳入进来，有救执政党选情之意。由此可见，中国虽然在这次金砖峰会上表现相对低调，但获益最大，因为它不但和它支持的中东3国，和另外3国关系也都很好。俄罗斯、南非和巴西也各有斩获，唯独印度和这新进6国关系一般，外界传出他有意阻止埃塞加入，后者的人均 GDP 不足$1000，是6国中最穷的，被印度认为会拖金砖国家的后腿。若此传言是真，表明印度在金砖5国的分量相对较轻。另外，新入会的6国有4国是穆斯林国家，而印度国内的穆斯林问题同样严峻，这可能对他也不利。故而，印度在金砖组织的权力未来可能会进一步稀释。之前媒体说印度反对扩员并非空穴来风，金砖把自己打扮成开放的国际经济组织，以映衬 G7 在组织体系上的封闭性。但它应该也不会无限制扩员，明后年它还会接纳新成员，在成员总数达到20个左右，最多不超过30个，基本将它认为有地区代表性的全球南方国家纳入后，会暂停扩员，甚至不再扩员了。 因为组织不断接纳新成员，会造成组织内部的协调成本大增，达成共识和制定政策议程更难，反而会削弱组织的力量。金砖5国是在用地缘经济的力量追求地缘政治的利益，但在他首批大扩容后，能否实现他宣称的提高全球南方国家地位和作用的目的，还要看他实际的运作以及西方的应对。邓玉文为政治评论员、独立学者、中国战略分析智库研究员兼中国战略分析杂志共同主编。尼日尔的政变是撒哈拉地区的最后一根稻草吗？外交政策。尼日尔最近的政变引发了人们对西方在撒哈拉地区反恐战役的有效性的担忧。尼日尔因其民主选举产生的领导人和亲西方的倾向而被视为打击恐怖主义的关键盟友。然而，军事接管使美国在该国的投资前景蒙上了阴影，包括一座1.1亿美元的无人机基地用于反恐行动。政变还对该地区其他稳定的民主国家，如塞内加尔和加纳构成了风险，并可能进一步加剧人道主义危机，增加撒哈拉地区伊斯兰恐怖主义的威胁。尼日尔的政变促使人们呼吁重新评估美国在撒哈拉地区的政策。批评人士认为，与非民主政府的安全优先伙伴关系的重点忽视了导致恐怖主义和政治不稳定的根本治理和经济问题。拜登政府的新的美国非洲战略强调民主发展和经济投资，是朝着正确方向迈出的一步，但实施该战略将面临挑战。五角大楼的庞大预算使得国务院和专注于外交和发展的援助机构的资源相形见绌。拜登政府对尼日尔政变的回应将成为其如何平衡外交政策优先事项的试金石。尽管政府已暂停对尼日尔的安全援助，但官方并未将政变称为政变，这将导致美国对外援助的广泛暂停。美国官员和专家担心，如果政变不能得到逆转或通过外交手段解决，可能会导致该地区进一步的军事接管，并破坏地区打击恐怖主义的努力。美国面临压力，要支持西非国家经济共同体 ECOWAS 在恢复尼日尔的民主政府方面的努力，但尚不清楚美国在这方面愿意走多远。亚当·图泽，为什么日本经济正在蓬勃发展？外交政策。日本经济在今年第2季度出现了6%的年化增长，这让许多人对这个国家的经济停滞感到惊讶。自从上世纪90年代房地产泡沫破裂以来，日本一直被称为经历了失去的几十年。我的学校陷入了2极分化，这并没有起到作用。华盛顿邮报评论版。埃利·蒂勒曼是托马斯杰斐逊高中科学技术学院的青年民主党俱乐部和青少年共和党俱乐部的主席，他讨论了美国社会极化和缺乏建设性辩论的问题。蒂勒曼和他的同学们创建了一个名为辩证法的课程，旨在教导学生如何进行有意义的对话，并尊重地持不同意见。他们已经举办了关于数字时代沟通和部落主义神经生物学的讲座。蒂勒曼认为，建设性的分歧对于一个正常运作的民主制度至关重要，并希望他们的倡议能激励其他人采取新的策略来解决分歧。莫迪的虎战式外交正在损害印度的利益。外交政策。印度总理纳伦德拉·莫迪的印度教民族主义议程越来越损害印度的外交关系和全球形象。政府的右翼意识形态信仰影响着其在印度境内外的行动。例如，莫迪的人民党被指责在曼尼普尔邦的种族冲突中推动印度教多数派主义，以及围绕一幅地图壁画的争议。该地图显示印度的边界延伸到邻国，引起了印度邻国的愤怒。人民党对印度教至上主义的推崇，导致了对宗教少数群体的仇恨犯罪和仇恨言论的增加。印度的行动引起了国内外的关注，越来越多人认识到这些行动正在损害印度的全球地位。尽管西方国家对印度洋太平洋地区的战略利益存在保留，但他们可能对印度国内的发展持有保留意见。莫迪政府的行动特别影响到印度的邻国，他们对印度的政治品牌越来越感到不安。印度教民族主义在印度的崛起正在破坏该地区的稳定，并助长有害的民族主义。莫迪政府的强硬印度教民族主义可能还会导致印度外交服务机构的持久性制度变革。谢谢您的收看。上面播报的内容是6度团队推荐的全球专业媒体 智库、政府机构和行业专家的最新报道、分析简报。更详细的内容，请大家去这些媒体、智库的网站阅读。这些内容并不一定反映6度简报的立场，亦不能作为任何决策的建议。6度团队由专业媒体人、学者、科学家组成的独立新型媒体，大家可以根据自己的专业要求订阅各种简报，网址是6dobrief.com。您在世界任何地方都可以通过电邮收到6度简报。
随着中国迅速崛起，乌克兰战局持续升温，以及金砖国家联盟全球经济实力逐步增强，众多观点认为，我们正迈向全新的多极世界秩序，标志着美国主导和单极格局的时代逐渐逝去。那么，单极、多极和美国主导这些词汇究竟意味着什么呢？而如果我们正身处于新的多极世界秩序中，究竟会是混乱还是和平？我们的时代是否将迎来自由或压制？二战结束后，一个新的世界秩序诞生了。在1939年战火爆发之前，英法两大帝国掌控着广袤的世界领土，美国、苏联和德国迅速崛起，成为强大势力。5年多的战争过后，西欧遭受了毁灭性的打击。随后，英国和法国开始目睹其殖民帝国的解体，始于1947年印度和巴基斯坦的独立。接着是第一次印度支那战争，在1957年导致越南、老挝和柬埔寨从法国的控制下获得独立。1962年，阿尔及利亚从法国统治下获得独立。随后是肯尼亚于1963年从英国统治下走向独立。正在发生的是全球权力分布的巨大变革。许多学者现在将那个去殖民化时期描述为双极，在这个时期，权力突然从旧帝国转移到了新的角色手中，于是美国和苏联之间的冷战开始了。这场冷战在许多暴力冲突中得以体现。越南战争中，越南民主共和国和越南南方民族解放阵线开始接受俄罗斯和中国的支持，对抗越南南方政府，而后者越来越多地得到美国军队的防守。在阿富汗，苏联军队与圣战者进行斗争，而圣战者则得到了大量的美国资金和支持。但是随着苏联在1991年的崩溃，似乎美国赢得了冷战。有人宣称，在这个新的单极世界中，美国已经成为了世界上的第一个国家，这被称为历史的终结。
Francis Fukuyama, author of the book The End of History and the Last Man. What's it all about?
Well, it's an imposing title.
在冷战时期的双极世界中，一个获得独立的国家是尚沃尔特共和国，它在1960年前是法国的殖民地。虽然尚沃尔特在技术上已经获得了正式的政治主权，但和许多其他前法国殖民地一样，仍然在经济上严重依赖于法国。尚沃尔特共和国没有对自己的货币有控制权，相反，它成为了前法国殖民地非洲金融共同体的一部分，使用与法国法郎挂钩的 CFA 法郎。发行这种货币的2家中央银行都受法国控制，非洲国家积累的所有外汇储备都存放在巴黎的法国财政部。CFA 法郎今天仍在使用中。尚沃尔特共和国在国内生产方面也高度依赖于法国，法国购买了其 27% 的出口产品，并向尚沃尔特销售了其 47% 的进口产品。尚沃尔特共和国的第一任总统莫里斯·亚梅奥戈于1960年上台，并很快禁止了所有政党。到了1966年， 他在一次政变中被中校桑古莱拉米扎纳废除，拉米扎纳成为尚沃尔特的第2任总统。拉米扎纳一直执政，直到在1980年被赛伊·泽尔伯上校发动另一次政变废除。2年后，他被少校长巴蒂斯特·维德劳戈发动政变推翻。维德劳戈不到1年就被上尉布莱斯·康帕奥雷废除，后者于1983年任命托马斯·桑卡拉上尉为总统。托马斯·桑卡拉是一个左翼领袖，他将国家更名为布基纳法索，意为政治之人之地，并发起了一场被他称为革命的大规模社会经济改革运动。他国有化了所有土地和矿产财富，发起全国扫盲运动，推行土地重新分配计划，启动铁路和道路建设计划，并禁止女性割礼、强迫婚姻和一夫多妻制等做法。作为他的革命计划的一部分，他为250万儿童接种了麻疹、黄热病和脑膜炎的疫苗，并发起了环保运动，计划种植1000万棵树，规范砍伐柴火，以防止撒哈拉地区的荒漠化。托马斯·桑卡拉和他内阁的12名成员于1987年10月15日被暗杀。暗杀事件发生在一次政变中，由他的前同事布莱斯·康帕奥雷领导。康帕奥雷成为总统，一直执政，直到2014年被迫下台。当时抗议者纵火焚烧了国会大厦。在所有这些进步中，布莱斯·康帕奥雷就在托马斯·桑卡拉的身边。在这里，他站在桑卡拉的背后，再次在这里紧挨着他。他们似乎是真正的朋友。在2022年，康帕奥雷受审并被判犯有谋杀桑卡拉的罪名。最近，该地区的不稳定局势有所加剧。自2011年以来，布基纳法索一直在其边境地区面临着一个由伊斯兰主义团体联盟组成的增长性叛乱，其中包括伊斯兰马格里布基地组织 AQIM、 努斯拉特伊斯兰 JNIM、 大撒哈拉伊斯兰国 ISIS of the Greater Sahara。 这场冲突现在被称为撒哈拉地区叛乱。2015年，这场冲突从马里蔓延至布基纳法索。另外，在2015年，罗克·马克·克里斯蒂安·卡博雷成为首位民主选举产生的总统，但他于2022年1月在一次政变中被保罗·亨利·桑多戈·达米巴中校废除。然而，达米巴在同年9月被伊布拉辛·特拉乌雷上尉推翻，特拉乌雷现为布基纳法索的现任总统。特拉乌雷总统已任命阿波利奈尔·乔阿西姆·基耶莱姆·德坦贝拉为总理。桑卡拉对布基纳法索的愿景可能会在基耶莱姆的总理任内得以复兴。基耶莱姆自称为桑卡拉主义者和左翼人士，已经开始一系列改革，首先削减了总统、总理和其他政府官员的薪水。基耶莱姆曾表示，布基纳法索不能再脱离托马斯·桑卡拉划定的轨道之外得到发展。特拉乌雷总统和基耶莱姆总理在今年2月宣布结束了法国在布基纳法索的军事干预，选择与俄罗斯建立更紧密的联系。这与马里和尼日尔采取的类似行动相呼应。这两个国家最近都因撒哈拉地区的叛乱而发生政变。马里和尼日尔也向俄罗斯表达了战略合作的意愿。当西非国家经济共同体 ECOWAS 威胁要对尼日尔的军政府进行军事干预时，布基纳法索和马里宣布，对尼日尔的外国干预也将被视为对他们的一种战争行为。这一系列政变是否标志着西非地区新的政治阵营的形成？布基纳法索、马里和尼日尔与俄罗斯不断加强的关系是否意味着全球权力中心的转移？但更重要的是，布基纳法索的人民是否会看到战争的结束和托马斯·桑卡拉激进愿景的复兴？感谢收看《勇敢面对多极世界》。
Today's event focuses on the promise and opportunities for the new Indo-Pacific Economic Framework. IPEF, as it's called, harnesses the strength of long-term allies like Australia, Japan, and South Korea it reinvigorates those relationships by bringing in increasingly important economic powers from the region, powers like the nations of Southeast Asia. Southeast Asia alone is now home to some 650 million people, and taken collectively, it is the world's 5th largest economy. It's no secret how America engages with this part of the world's most dynamic economic region, will shape so much of our future. And I think we all realize there's an awful lot at stake. Every day we see new threats to the rules-based economic order, an economic order that has lifted lives and built communities and advanced and improved the human condition. Our challenge is to find innovative ways to turn back those threats and to create new momentum for commerce, trade, and entrepreneurship. IPEF offers up a new rules-based roadmap that can help. It aims to provide a foundation for renewed economic vitality that helps member countries individually and collectively. All of this, of course, is music to the ears of WISC. And again, staying true to our mission, we want to make sure that we lift it up and prioritize it in today's foreign policy discussions. We are honored to be hosting the Secretary of Commerce, Gina Raimondo, who of course led the successful conclusion of IPEF's supply chain pillar. She's also leading the fair economy and clean economy pillars of IPEF negotiations that we all hope can be completed by the APEC summit in November. At a time when the U.S. Commerce Department is taking on massive new responsibilities in American economic leadership, including the effort to revitalize the U.S. semiconductor industry while also protecting our national security, we are all fortunate to have an exceptional leader at the department's helm. A good part of the criticism in this town is that we have too many public officials who don't understand the private sector and private sector leaders who don't understand the public sector and how government works. She combines the entrepreneurial spirit of a venture capitalist with her executive experience as Rhode Island's governor, and she applies them to the task of revitalizing America's economy and economic relationships. Joining Secretary Raimondo on stage is our own Dr. Sadek Wahba. Not only is Sadek the chair of WISC and the chairman and managing partner of I2 Capital, he is also a member of President Biden's National Infrastructure Advisory Council. He earned his doctorate degree in economics from Harvard University, and he began his career as an economist for the World Bank. I am grateful that he is here to help lead this conversation, and with that, I'll turn things over to you, Sadek, and again, Secretary, it's great to have you. Welcome.
Thank you.
Thank you, Ambassador Green, for your kind remarks. I'd like to also add my personal thanks to Secretary Raimondo for taking the time to be with us today at WISC at the Wilson Center. It really has been an extraordinary Department of Commerce, full of dynamism, and so thank you for your leadership.
Thank you.
So when you look over the last 10 years, trade as a percentage of global economic growth, it was around 60% just before the financial crisis, and is now down to somewhere around 55%, which is, from a relative perspective, it's a meaningful change. Free trade agreements are not in favor these days. We've seen an increase in trade barriers and tariffs, not just between us and China, between us and allies, and within EU, also an increase in trade barriers, UK, Europe, EU, and other countries. So we tried to have the TPP, and the Trump administration withdrew from that. And interestingly, immediately after, China started its own version of the TPP. But then in 2022, President Biden launched IPEF. And obviously, IPEF is not a trade agreement, but it looks as if it achieves much more. It really looks to the long-term economic prosperity of the peoples involved in IPEF. So what would you say are the long-term objectives of IPEF?
Yeah, a lot in that question. First of all, thank you for having me. It's fantastic to be here. And as I was listening to the ambassador's introduction of business people who don't know how to interface with government and vice versa, I would say that you, Sadek, stand out in that respect. We have had an outstanding partnership since I've been secretary, and I just want to thank you publicly for your engagement with me at the Commerce Department, but also with the president and everything we're doing in infrastructure. The public-private partnerships are more important than ever. In fact, this whole Center for Strategic Competition doesn't happen if it's just the government. So I want to thank you for recognizing that and working so closely with us. You know, you're right. Free trade agreements aren't in favor at the moment. Some people think that's a bad thing. Some people think that's a good thing. It is what it is. But yet, we must be present in the Indo-Pacific. As you said, 40% of the world's economy, most dynamic economies, fast-growing economies, chock full of innovation. We have to be present. And so for the 5 years before President Biden took office, the United States was not present economically in these regions. We didn't even, have a framework for engagement, I would say.
So you talk about supply chain, which is one of the key pillars. I think that you've reached preliminary agreement with all of the countries on the supply chain. You mentioned earlier that the IPEF framework in general has that flexibility for countries to select one or the other. Obviously, supply chain is one where I believe everyone wants to participate in.
Yes.
We had a panel earlier that talked about the key components of that supply chain. What can you tell us a little bit more about what it is that you're looking to achieve, and particularly maybe two areas? One is data sharing, which is an important element that people have talked about, and then the other one is more enforceability. So there is a clear benefit for all to participate in the supply chain structure, but do you think that the enforceability element is an important part of what an agreement should include?
Yeah. Okay, so a couple things. Yes, you're right. I was very pleased. I was in Detroit over the Memorial Day weekend. We had a ministerial. We had all of the countries were there, which is excellent. 13 countries came. And we agreed in principle, all 14 countries, to the text of the supply chain pillar. I just want to say, as evidence of the demand, the economic demand signal coming from this region, President Biden announced IPEF in May in Tokyo. 4 months later in September, every country signed on to negotiate. And then a few months after that in May, we had complete agreement on the supply chain pillar. That's, things don't happen that fast.
No, that's probably unique.
It is. The momentum, the speed, the pace, the urgency with which we're working this is incredible. I have people on my team who worked on TPP. Nothing happened in TPP in a matter of months. So what's my point? My point is, one, they have a demand. Two, there's something to the fact that this is not a trade agreement. It's more flexible. It's responsive to a few specific needs: supply chain, decarbonization, infrastructure, digital. And so it allows us to move fast. Is it enforceable? I would say yes and no. It's not a traditional trade agreement. It's not enforceable insofar as the tariffs don't come back up if there's noncompliance, but it is enforceable because countries that don't follow the rules or live up to their commitments don't receive the benefits, right? So if there's a country who is not following as according to the agreement, then they won't receive the benefits. That we have, for example, we've set up an IPEF supply chain council. Every country has an appointed person to that council. That's a way to facilitate commerce, a way to deal with issues, a way to share data, a way to predict supply chain problems before they happen, all incredibly valuable to all of our economies. You want to be part of that club. So this is more of an incentive. We want to provide incentive to participate. And in that respect, it's enforceable, because if you don't participate, you don't get the benefit. But it is true, there's no, legal enforceability per se.
So we talked about the supply chain pillar. There are, of course, two pillars where you're leading also, which is the clean economy and the fair economy pillars. The clean economy also includes a component which relates to global infrastructure, which plays a strategic element in the context of the U.S. overall policy of strategic competition. So what can you tell us about those two pillars, which really are going to complement the supply chain as well as the fair economy one?
So you know this as a businessman better than I, but every American company I talk to says we would do more business in, fill in the blank, India, Indonesia, Malaysia, Thailand, if there were less corruption, a fair court system, tax structure which is fair and transparent and consistent. So that's what Pillar 4 is all about, which is to say if you want the benefit of more supply chains in the region, more capital for infrastructure in the region, investors need to have some confidence and trust. So in the fourth pillar, which is anti-corruption, good governance, we're asking the countries to sign up to certain standards around transparency, predictability, anti-tax and anti-corruption. And if they don't, then they'll be kicked out of the club. They won't have the benefits. And we are also, the United States, I should say this, although the Commerce Department is taking the lead on this negotiation, this is obviously an all-of-government priority. So State Department, Treasury, USAID will be providing technical assistance to these countries as they improve their tax code, improve their anti-corruption, et cetera. With the third pillar, infrastructure and decarbonization, I have been to these countries. I have spoken to the leaders in all of these countries. They need better infrastructure. They want better infrastructure. They want to race towards a carbon-free world, and that requires capital, and that requires know-how. And so in this respect, what we are saying to the countries is, let us work with you and help you. Once again, State Department will be bringing money to the table to do like a deal accelerator, to get deals ready on the ground. Just as you know yourself, you can't invest in something if it's not investable, if it's not ready to be invested in. So the State Department, USTDA, USAID, gonna come to the table to get these deals ready. And then U.S. private sector and Japan and Australia and New Zealand excited to make these investments. I should say, I Squared Capital, in this respect, SIDAC is really a leader in this effort. He announced a $1 billion+ fund to invest in IPEF countries in sustainable infrastructure. And the DFC, U.S. Development Finance Corporation, put $300 million in that as kind of concessionary capital, if you will. What's the point? That's exactly the model. You asked, what does success look like? 50 more of those in the next 10 years. The DFC or the World Bank or Multilateral Development Bank or some kind of capital combined with pure private capital invested in the region to decarbonize, make our supply chains more resilient.
So you bring a very important element when it comes to fair economy, where you mention capacity building. Because one of the issues that you see in some, not just IPEF countries, but other countries, which is the willingness to improve rule of law, improve the systems they have, but it's a question of training, it's a question of capacity, it's a question of bringing in latest technologies, improving the education system. So one of the components of IPEF, which I think is, again, unique in its respect, is that you're integrating that capacity building effort directly into the different pillars. So you're looking to create that know-how, but with a direct impact associated with the fair economy pillar. So you're not basically telling countries, you need to do 1, 2, 3, but you're basically suggesting we will try and help you in doing that. So could you give us a little bit of more information on how that capacity building will be integrated within the IPEF framework?
Yes, really it's exactly as you say. A number of these countries certainly have the desire and the will to take these steps. They understand that in order to attract outside capital, they will need to invest in, you know, their systems. But so many of them say, like, how do we do it? It's very interesting. So that's when we can say, we'll send technical experts from the U.S. And by the way, it's not just the U.S. Japan is leaning in on this. South Korea is leaning in on this. Australia, New Zealand, they want to send technical experts as well to some of these other countries. And at the end of the day, you know, what do we have? Like, if we're successful, we have a rules-based order with rules of the road, less corruption in this part of the world. So I think that it's not, the approach, as you're saying, it's not heavy-handed. It's not let us tell you how to do things. It's let us work together, offering technical assistance, capital, connections, connectivity, data, the end result of which is a more resilient supply chain for all of us and a real U.S. economic presence in the region.
So we have a summit in November in San Francisco. Mm-hmm. What would you like to achieve between now and November?
Mm-hmm. I'm smiling because I do have a lot to do between now and then. So there's the APEC leaders meeting in San Francisco at the end of November, and I am determined to finalize agreements with all of these countries on all three pillars that I'm managing. So the supply chain pillar, we signed up over Memorial Day. By November, I'd like to deliver the tax and anti-corruption and the infrastructure and decarbonization. And I also would like to be able to have a couple of more announcements, similar to the I-squared announcement, of real, like, concrete deliverables. That's what the region wants to see. Concrete deliverables. And quite frankly, it's what we in America need.
That's right. So as part of WISC and the Institute for Strategic Competition, I'd be remiss if I didn't ask you a question about China. Yeah. So the president met President Xi Jinping in Bali. There was an agreement to improve relations. Since then, we've had the Secretary of State visit. We've had the Secretary of Treasury. You met your counterpart in Washington, D.C., and the honorary chairman of the Kissinger Institute on China, which is here at the Wilson Center, at the young age of 100, went to China and visited President Xi Jinping, which is amazing. The Department of Commerce is at the intersection of all of the different components related to the relationship with China. What is it that the Department of Commerce and you are looking to do with regards to our relationship with China?
Yeah, thank you for the question. And I do plan to travel later this summer. We're still finalizing a date and plans. At a high level, we need to do business with China wherever we can. We need to promote wherever we can, but we need to protect where we must. And I have a role to play in both of those. So, for example, trading wherever we can. There are many industries, food, entertainment. I was recently with Bob Iger of Disney. Their Shanghai Park is growing gangbusters. You know, Starbucks is opening a store a day in China. I at the Commerce Department recently started an initiative around export promotion of small U.S. companies in the health and beauty product space. Like, there is no national security risk to the United States selling coffee and health and beauty aids to China. It creates jobs in America. There's a lot of benefit to doing business where we can. Having said that, we have to protect what we must and be eyes wide open about the threats and strategic competition. And in that respect, commerce is right at the center of that too. Yeah. So deciding which technologies, whether it's artificial intelligence or semiconductors or software or hardware that the United States has that China wants to advance their military capability. Figuring out what that is and working with our allies to deny China that capability. And that's what we have to do. You know, protect, and also promote. And then finally, invest in America. I'm of the view that by far the most important thing we can do as America in our strategic competition with China is to invest in America.
Exactly.
So if you look at like what I do in my little corner of the world, I am managing the CHIPS Act, investing $50 billion in America. I manage broadband, $50 billion to make sure every American is connected to high-speed internet. I do the export controls, denying China this technology, and export promotion, like I just explained. Of all those things, when I think about, hey, Gina, what's most important for competition with China, it's the first bucket, out-innovating, investing in America. And so that's what I do every day.
And that's a little corner.
And that's a little corner. That's my little corner. But
one hell of a corner.
it's maybe it's a important corner, but I think that first plank doesn't get enough attention. Yeah. You know, when people say, how are we going to compete with China? Bet on us.
Agreed. And I think, Secretary, the idea when you think about what the President has been doing over the last couple of years, which is invest domestically, a strong domestic economy with a strong labor force, strong economic productivity over the coming 10 years, is effectively going to allow the U.S. to compete internationally.
Without question. I believe it.
欢迎您收看《华尔街简报》。再次严重低估预算盈余。加拿大 CBC 新布伦瑞克省政府宣布，2023-24财年预算盈余为 1.996 亿加元，远高于3月份的预计盈余4000万加元。然而，财政和财务委员会部长厄尼斯蒂夫斯警告说，他没有看到与以往年份相同的意外收入迹象。去年，政府预计2022-23财年的盈余为 8.82 亿加元，而最初的估计为 1.355 亿加元。2021-22财年的预计赤字2500万加元，也变成了盈余 7.77 亿加元。收入增加归因于更高的有条件拨款收入和超出预期的经济增长。政府计划投资于最需要的领域，包括住房、气候变化倡议、教育和医疗保健。报告还预计2023年实际国内生产总值增长 1%。高盛表示，对于7大科技股的投资，对冲基金的敞口达到了历史最高水平。加拿大环球邮报，对冲基金增加了对美国7大科技股的投资，这7大科技股的市值占到了高盛追踪的对冲基金总市值的约 20%。微软、苹果、谷歌母公司 Alphabet、Meta、亚马逊、英伟达和特斯拉今年的股价都上涨了超过 35%， 其中英伟达更是暴涨了 211%。对冲基金被这个行业的强劲表现所吸引，但也有人认为，挑选个股的对冲基金可能难以胜过其他资产类别。VanFast 在成为全球第3大市值最高的汽车制造商后继续上涨。加拿大环球邮报，越南电动汽车制造商 VanFast 的股价周一大涨 21%， 延续了上周的涨势，使其市值增至1600亿美元，增幅超过了4倍。该公司本月在华尔街上市时表现出色，并迅速增长至第3大市值汽车制造商，仅次于特斯拉和丰田。然而 VanFast 公开可交易的股份较少，使得股价容易波动。过去12个交易日中，有11个交易日股价上涨或下跌超过 14%。根据一份文件， VanFast 几乎完全由越南首富母公司 Van Group 的创始人范纳特·武昌控制，持股比例约为 99.7%。FTX 的 Bankman-Fried 对法官决定将他在审判前监禁提出上诉。路透社，山姆·班克曼弗里德 Sam Bankman-Fried 是前亿万富翁， 也是 FTX 加密货币交易所的创始人。他对在审判前监禁他的决定提出了上诉，称他因行使言论自由权而受到惩罚。美国地方法官刘易斯·卡普兰 （Louis Kaplan） 撤销了班克曼·弗里德的保释，因为他发现有充分理由相信班克曼·弗里德通过与《纽约时报》记者分享他的前同事卡罗琳·埃里森 （Caroline Ellison） 的个人写作来干扰证人。班克曼·弗里德的律师辩称，他分享这些写作是为了捍卫自己的声誉，而不是为了恐吓埃里森。班克曼·弗里德被指控窃取数十亿美元的客户资金，用于弥补他的对冲基金 Alameda Research 的亏损。他声称自己无罪。渣打银行将以7亿美元的价格将其飞机租赁部门出售给沙特财富基金。路透社，渣打银行将其全球航空金融租赁业务以7亿美元的价格出售给总部位于沙特阿拉伯的 Avilis。此举是该银行努力简化业务并专注于与竞争对手有所区别的领域的一部分。Avilis 是沙特阿拉伯主权财富基金拥有的喷气式飞机租赁公司，此次收购将支持沙特阿拉伯的航空生态系统。渣打银行预计从此次出售中获得约3亿美元的收益，其一级资本充足率将增加约19个基点。尽管航空需求反弹，全球飞机租赁业务仍面临通胀和借贷成本上升的挑战。拜登对美国贸易的路线与克林顿和奥巴马不同。华盛顿邮报，拜登总统正在重塑美国对国际贸易的态度，他拒绝传统的贸易协议，关注美国工人的需求。这种与几十年来的贸易政策的决裂引起了商业团体的不满，他们认为旧的做法让美国工厂工人失去了工作。拜登保留了特朗普对中国进口商品的关税，并对销售先进的美国计算机芯片和美国对一些中国科技初创企业的投资施加了限制。总统的政策赢得了一些特朗普的盟友的赞扬，但也激怒了一些温和派民主党人，他们认为扩大贸易是繁荣和降低价格的途径。从前海到上海，充满憧憬的南美洲海运丝路。VOA 郭笃卫，从前海到上海 From Chiang to Shanghai 已经成为近日秘鲁居民最常听到的宣传短语，这是秘鲁官方对在建最大港口工程远景的写照，同时也是中国国企2017年在加勒比海岸最大的巴拿马马岛集装箱码头 Isla Margarita Port Terminal 10亿美元专案全军覆没后，一带一路重启拉丁美洲大型港湾建设的起手式。新的前海多功能港口位于南美洲秘鲁中部海岸同名海港小镇，距首都利马大都会80公里。这个私人投资专案大股东为中原海运港口有限公司 CSPL， 共占 60%， 秘鲁火山矿业公司 Volcan Minera 占 40%。第一阶段耗资13亿美元，涉及4个码头及附属建物，将于2024年最后季度完工。最终计划为15个码头和一个工业园区，总经费34亿美元，使前海成为南美洲太平洋沿岸最大的枢纽港和转运中心。原本为旅游海湾的前海港为天然深水港，最大水深 17.8 米。该港投入使用后，将能够容纳并处理 1.8 万个集装箱的超大型船舶。规划一期建设4个泊位，包括2个多用途泊位、2个集装箱泊位，以及27万平方米的综合辅助区。近7年设计总输送量100万标准箱，杂货600万吨，车辆16万辆。国营的秘鲁通讯社 Agencia Andina 报道，前海港将成为南美与中国上海之间贸易的区域海运枢纽，同时提供秘鲁邻国智利、厄瓜多和哥伦比亚货物转运。目前从南美洲到亚洲的中国、韩国或日本需要35到40天，但通过前海港直航将能够在23天内抵达。2012年5月起，前海港设计建设项目启动。2019年1月，中原海运集团所属中原海运港口有限公司与秘鲁火山矿业集团 Volcan 在瑞士达沃斯签署专案认购及投资协定，中原海运收购秘鲁前海码头 60% 股权。同年5月，专案正式交割。2021年5月，中国港湾4航局组成的联合体中标前海多功能港口新埃期运营区和综合办公区施工专案，工期36个月。港口工程包括移除一座小山，并挖掘了一条 1.8 公里长隧道， 作为与港口运营相关货物连接泛美公路北段主要长廊，目前专案总进度超过 40%。秘鲁中远海运港口公共事务经理马里奥·德拉斯·卡萨斯 Mario de las Casas 称，该港口专案是中资企业在拉美地区中标的最大港口类专案，也是目前中资企业在秘鲁承接的单体合同额最大的专案。前海港的建设将创造1300个直接就业机会，以及创造约8000个间接就业机会。中国驻秘鲁大使馆表示，建设投入运营后将创造1300个直接就业岗位和5000个间接就业岗位。秘鲁政府国际承认危机。秘鲁政府表示，该大型港口将成为国民经济的催化剂，并使秘鲁在国际舞台上获得特殊的地位。国际舞台上特殊地位一词，凸显秘鲁政府深陷国际承认危机下急于恢复正常的窘境。秘鲁多年来政争不断，现任总统迪纳·博鲁阿尔特 Dina Arcelia Boluarte Segarra 自2021年起担任秘鲁副总统。2022年12月7日，原秘鲁总统佩德罗·卡斯蒂略 Pedro Castillo 试图解散国会不成，反而成为第3位遭国会弹劾下台的总统。博鲁阿特宣誓继任总统。迪纳·博鲁阿尔特总统接手8个半月以来，拉丁美洲国家对秘鲁政府的立场仍然呈现铁板一块的两极化。秘鲁依然没有获得支援前原住民总统卡斯蒂略的拉丁美洲左翼国家的外交承认，其中包括谴责新政府接手等同政变，并首开拒绝外交承认记录的墨西哥，以及紧跟其后的委内瑞拉。更令人忧心的是，秘鲁紧邻玻利维亚、哥伦比亚和智利也公开谴责政变闹剧至今。急于获得国际支持的秘鲁官方与网络侧翼群，对前海港投资可能带来的效益最大化之际，全球最大的金属、矿产、能源和农产品交易商嘉能可 Glencore 却在8月24日发布声明，质疑拥有前海港 40% 股权的火山矿业公司的股东大会上未经正式程式批准从前海港资产分拆采矿业务的决定，违反了资讯透明的原则。拥有火山矿业 23% 股份的嘉能可声明选址称，火山矿业公司财务并不健全，甚至进一步指控该矿业公司没有依照合同规定，将原先在前海港侧的800公顷土地并入新前海港工程，供集装箱集散场之用。今年5月中旬，通往港口隧道上的前海镇主要街道，路面摊方车辆下陷被困，18栋民房出现大面积龟裂及部分倒塌，加深了长期抗疫工程影响正常生活的该镇居民的恐慌。中远海运港口宣布隧道工程暂停作业，承诺赔偿及协助搬迁安置，但并没有平息愤怒情绪的蔓延。居民对失去美好海湾和对土地的主导权而上街抗争，一度封锁泛美公路北段，表达他们对政府忽视居民权益的不满，并要求住房部长出面干预。秘鲁观点网站 El Montanero 针对前海港引发的议论，邀请当地投资顾问佩德罗·格瓦拉 Pedro Guevara 介绍南美的上海的意义。曾任秘鲁驻台北商务办事处主任的格瓦拉说，前海港不仅击败智利，还将受益于超大型船舶直航中国的优势。新港输送量将超越巴拿马运河港口，使秘鲁成为中国在拉美供销及进口原材料的中心，同时掌控21世纪新石油锂出口的主导权。格瓦拉说，南美 ABC 阿根廷、玻利维亚与智利出口全球 48% 锂原料，加入秘鲁后的 ABCP 占比将达 54%， 凯达港将成为南美洲向中国出口锂的关键口岸。1994至2000年担任智利总统的爱德华多·弗雷 Eduardo Frei 在8月初的公开活动中，呼吁政府关注秘鲁前海港 CHENK 专案。他说，在7月28日，当地水星报 El Mercurio 的秘鲁独立纪念日特刊上看到该港的宣传，受到极大震撼。2022年4月，卸下智利驻亚太经合组织 APEC 全权代表职务的弗雷提醒，前海港将成为南美洲最大的港口，并将于2024年底开始运营。智利出口 93% 靠海运，缺乏如此规模的港口。他同时提及，前海港将在2024年11月亚太经合组织领导人峰会在利马举行时开始运营。亚太经合组织由21个亚太经济体组成，澳大利亚、汶莱达鲁萨兰国、加拿大、智利、中华人民共和国、香港、 印尼、日本、马来西亚、墨西哥、纽西兰、巴布亚纽几内亚、秘鲁、菲律宾、俄罗斯、新加坡、韩国、中国台北、泰国、美国和越南。秘鲁曾在2008年、2016年主办过亚太经合组织会议。智利顾问公司 Athena Lab 在前凯港对智利的地缘政治影响的报告中表示，一旦秘鲁前凯港工程完工并开始停靠海运业目前最大的船舶，智利沿海港口将受到最大影响。因为智利在发展和解决当前问题方面进展甚微，对外贸易的成本将会更高。报告称，在过去10年中，智利除了对北部地区的阿里卡阿瑞凯港疏浚工程或其他港口泊位的改进外，没有任何新资本注入活化国家经济。2019年，智利港口输送量为450万个标准集装箱 TEU， 落后于巴西的1040万、巴拿马的740万和墨西哥的710万个。智利中部最大的圣安东尼奥 San Antonio 巨型港口计划预计将在应对这场危机上变得更加重要，但其建设却预计在2030年后完成。谢谢您的收看。上面播报的内容是6度团队推荐的全球专业媒体、智库、政府机构和行业专家的最新报道、分析简报。更详细的内容，请大家去这些媒体、智库的网站阅读。这些内容并不一定反映6度简报的立场，亦不能作为任何决策的建议。6度团队由专业媒体人、学者、科学家组成的独立新型媒体，大家可以根据自己的专业要求订阅各种简报。网址是6dobrief.com。您在世界任何地方都可以通过电邮收到6度简报。